joining in. How do you characterize the market, the index recovery today? Yesterday was a day of dropping from the highs. Today it's a recovery from the lows.
Yeah, hi, very good afternoon, Neeraj. So, Neeraj, last few trading sessions, in fact, last couple of weeks, we have seen on the index front, market has consolidated within a range. And all the positive news flows that we have seen with regards to good GDP data or even this major news of GST reforms, I think the markets have not reacted that positively to this big news flows. And one of the main reason I believe that has been the FIS selling figures, which we are seeing daily on a daily basis on a cash segment, as well as in the index future segment where they are short heavy and they are not covering the short positions. So even if you see the USD INR, mainly because of this FI selling, USD INR has depreciated recently. And generally, we have seen historically also that when INR depreciates, the broader markets or the markets did not see a trended up moves. So because of that inverse correlation, we believe that in spite of these positive news flows, markets have not reacted that positively. But on the lower side, markets have formed a very strong support base post the recent correction around 24,400 levels. And till this 24,400 is intact, there are chances that we would see a positive momentum going ahead because a lot of stock specific buying interest is clearly seen in last few trading sessions. On the higher side, 25,000 is the significant resistance. So markets have formed a range of 24,400 to 25,000. And this seems to be more of a time-wise correction now after this recent price-wise correction. And once we get a breakout about 25,000 on the index, then I think we would see a good, decent trended up move where all these positive things would start getting factored in. So as of now, it's more of a stock pickers market. Traders should focus more on picking stocks that are likely to do well or which are doing well in such corrective phases. And those who are trading the index, they can wait for a breakout about 25,000 to trade on the long side for a directional move.
And since you said it's a stock pickers market, what would your picks for the day be?
Yeah, so we have a couple of recommendations on the long side where positional chart structures are looking positive. One is Apollo Tyres. So we have seen a good run-up move in the auto sector in last few days, post this year, even before the GST reforms announcement was there. We believe that certain auto ancillary names are now looking good from a positional perspective, within which Apollo Tyres is one stock where the stock has given a breakout from falling trendline resistance yesterday, and that too supported by very high volumes. So here, short-term traders can go long Apollo Tyres with stop loss below 465 for potential targets around 520. And NBFCs is another segment where positionally we expect that once the index gives a breakout or the broader markets resume the momentum, then NBFCs can show relative outperformance. You can see L&T Finance Holdings already trading at its 52-week high. Bajaj Finance has formed a good support base. M&M Finance is one stock which we are recommending to go along from a trading perspective, because here also we have seen a decent consolidation over last 3 to 4 months. And today there are no signs of the breakout from that consolidation. So NBFC as a space, we are quite positive from a positional perspective, within which M&M Finance is one stock which has not rallied yet. So the risk reward ratio is favorable here. One can go long with stop below 262 for potential short-term targets around 285.
Okay, Ruchit, stay on. Let's get in a word from Amit Mahajan, Director of Paras Defense and Space Technologies, because there's a lot of, there's some clarity needed around what's the kind of benefits that come in because of the GST rate cuts to defense companies, and particularly companies which also have presence in the drone ecosystem. Amit, great having you. Thanks for joining in. Pray tell us, what is your sense at Paras Defense about what does GST 2.0 mean for you?
Firstly, Neeraj, thank you so much for having me over. It's always a pleasure talking to you. According to me, if you ask me from a broader perspective, from a macro level, these GST reforms and what they have done for the defense industry in general and drone industry in specific, I'd like to say that this is their way of showing that this is the area that you need to invest. This is the area that you need to be a part of, and all the incentives. This is the indication that the sector needs a much bigger involvement of the industry. And all the encouragement is up for the industry to give. And hence, if you see from the drone perspective, the supply chain has got eased up. the GST rates have got cut. So not just for the procurement, but also for the whole supply chain, it's a kind of a sigh of relief, encouraging the industry to do larger volumes and do start investing into these sectors much more than they would otherwise do.
So Mahajan, can you give us a perspective as to how much of a cost saving are you expecting from this and in terms of the overall uptick that you might see in terms of your margins as well?
I'm not just looking at the cost saving part. Yes, the cost saving will be there, say about 10-15% is the benefit that we'll get. But what it will also do is it will start boosting the morale of the industry by saying, okay, there is an impetus by the government for this sector. There is an encouragement which is being offered, and it will start yielding into higher volumes, better investments. And as soon as the volumes go higher, that is where you will be able to derive more profitability out of this particular business. And that is the larger game, if you ask me.
And Amit, sorry, so understand the larger game, but point to point, I heard you speak about input costs, supply chain, etc. Do those costs go down for you, and therefore net over the next 12 months, could there be some uptick in operational metrics because of lower input costs for you as a company? We read multiple versions of what's happened to the drone ecosystem, GSTs as well. So which is what I'm trying to understand from you.
My lower input costs will also translate into my lower output costs. So the government is also not going to levy tax on output that I'm doing in this particular segment. So I'm not saying that it will have a large benefit from a tax saving perspective, but in terms of the encouragement, in terms of the volumes that I will be able to do, in terms of ease of my input. Say today, if I have to buy something and my input cost is one and the bureaucracy which goes along with it is another. Now all of that gets eased up. This is one sector which gets that limelight. My supply chain gets eased up, and this is where the benefit is larger than just the cost of it. Cost is, yes, for sure.
Fair call.
Okay. All right, Mr. Mahajan, thank you so much for giving us those insights and helping us understand as to what GST means for defense companies. And thank you so much for taking your time and speaking with us.
Always a pleasure.
All right, now shifting focus to our next segment of the day, that is stock of the day, and the stock that we've picked today is Sunteck Realty. The kind of moves that we're seeing on the counter, 13% as we speak now. We have Anushi joining us to give us more details as to what's happening with regards to where Sunteck Realty stands.
Well, strong up moves that we are looking at in this counter. Now, 15% is kind of an intraday high that we've already seen for Sunteck Realty. And this is surprising considering what's been happening with this particular stock in the last 6 months or even the 1 year period itself if you're looking at. Now, this is one of the stocks in real estate space which have seen higher pressure building onto it. We've seen about a 15% or even a 23% of a cut in a 1 year basis now that we are seeing. But today's buzz is mainly on account of the 500 crore of a fundraise that the company is planning on a preferential basis. Now, in what area does it pertain to, whether it's for land acquisition that they're eyeing for more business development or something that we should be watching out for. But let's see so far how the performance have been in terms of how the pre-sales growth has been. The company has recorded about a 31% of a growth, and this has been something that it has seen over the last few years. 30% is the growth guidance that they've given for pre-sales for this year as well. Collections, however, have been more on the muted side, about a 3% of an uptick that we are looking at. But the company anticipates a much stronger growth in the second half where there would be new launches coming forward. So collection growth is something that we should continue to see. Net debt to equity levels also, if you look at, that's almost negligible that we are looking at, while operating cash flow surplus stood at 108 crores. So some bit of an improvement that we are seeing in the first quarter for this particular metric as well. Other than that, let's also focus on the business development potential side. Now, the company in the recent notes, if you're looking at, they've secured a residential redevelopment project in Andheri, and this pertains to the size of 1,100 crore that we are looking at. Overall, if you look at their gross development value, that stands at 40,000 crore. This is an interesting one considering its execution which will be in play, because onto the outlook forward, they expect this 40,000 crore number inching upwards to 50,000 crore as well. And this is with a pre-sales growth of 30% that we are looking at, and stronger collections as well. In terms of how analysts are seeing this particular counter, well, despite of correction in the last 1 year or year-to-date basis that we are seeing for this particular stock, analysts continue to remain bullish, and this is with about 13 buy calls that we are looking for this particular counter, with no sell or hold ratings that we are seeing, which brings the total upside potential to more than 30% is what we are looking at currently. So that's why Sunteck Realty in focus in trade today.
All right, Anushi, thank you so much for bringing us those details. Ruchit, I'll come to you quickly. What are the charts indicating for Sunteck Realty? A 37% upside is what brokerages are penciling in for the next 1 year. From a longer term perspective, are the charts attractive enough as per you as well?
Yeah, so the stock price has already gone through a decent corrective phase over last few months. Just a year ago, I think the stock had made a high of around 700, 690. And from that, the stock corrected towards 400 levels. So from a risk-reward ratio perspective, already the corrective phase has been done. Now, today's up move has been led by very high volumes compared to its recent average. So this is a sign of some buying interest at lower levels. So I think one can keep a buy and dip approach, and if we get any minor dips again post this today's move, one can take that as a buying opportunity for mid to long term.
Okay, that's Sunteck Realty. Ruchit, can't not talk about stocks which are not doing well, right? And one of them is Varun Beverages. 2 days or 3 days on a trot, sulking. What's the trade here?
So Neeraj, it's not just 1 or 2 days where the stock has shown an underperformance. If the stock went through a split of 5-2 in the month of September 24, that is almost 11 months ago. And post that split, we have not seen any kind of buying interest or momentum coming in on the positive side. I think post split, the stock was around 670. From that, gradually we have seen the stock showing corrective phases, and any pullback moves, the stock has not yet surpassed even its 200-day EMA over last few months. So I think already there has been underperformance since 10 to 11 months, and still there are no signs of reversal. So until we see at least a breakout about 200 EMA, which now comes around 520, it's better not to do any kind of bottom fishing, considering the stock has shown underperformance even in the rising market or when the broader markets have done well. So on the low side, the major immediate support is around 460, which if gets break, then we could even see levels around 440 in the near term. So rather than doing any kind of bottom fishing in such underperformer, I would wait for some signs of trend reversal before taking any fresh trades on this.
Okay, so that's with regards to where Varun Beverages stand. It's down 3% as we speak. But we have Somit joining us with his daily update on what he's hearing on the streets. Somit, what are you picking up today?
Well, multiple stocks that remain in focus. Actually, this is happening way before our usual time today.
Yeah, it is.
So yeah, multiple stocks that remain in focus. Firstly, it's Varun Beverages. You were also talking about it. The stock is down. Now, dealing rumor indicating that there's a buzz of a potential block deal that could happen anytime soon in this counter. The second stock that remains in focus is Prime Focus. There was a big block that happened in trade. Around 1.5% of equity changed hand. Dealers are indicating that a prominent HNI investor was a buyer in trade, and multiple other PMS have also bought stake in Prime Focus. So it would be interesting to see the block deal data that comes out today post-market. BAC buy flows on the back of strong volume data is what dealers are indicating. For Sammaan Capital, yesterday the announcement came in where Himanshu Modi will now be the deputy CEO for the bank, but this for the NBFC. But despite that, we are not seeing such kind of a big moves. Obviously, the stock has also run up a lot, but there's also a buzz of a potential selling that could happen, that could start soon. A large prominent FII who holds stake in Sammaan Capital might look to sell its stake either in tranches or at one go is what dealers are indicating. So keep an eye out for that. And Asian Energy is another counter. We have been talking about this counter multiple times. The buzz currently on the street is that the company might announce an acquisition soon. So keep an eye out for that. And Industar was part of our segment on September 3rd, where we had indicated that promoter Bharti Airtel has been buying shares from open market, and today the disclosure that has come in on the NSE exchange is showing that over a period of 25th August to September 1st or September 2nd, they have bought close to 65 or 70 lakh shares from open market. But apart from that, is one more counter that I would want to discuss with you is on PNB Housing. That stock has also been buzzing in trade. Now, the buzz around the street is that the new MD announcement might come in anytime soon, so keep an eye out for that as well.
Oh, okay. And there's a bit of an undercurrent to the stock as well. Very interesting. I think this week too, PNB Housing has had some fairly volatile moves. Sumit, thanks for that. I want to get in Ruchit's view on PNB Housing, simply because that stock, just as we speak, is starting to bump up a bit. Any trades here, Ruchit?
Well, again, the stock has seen a downtrend in last 1.5 months. From 1100, we have seen a sharp corrections towards 790. The momentum readings are oversold, and there could be some pullback trade only, but no signs of a trend reversal or bottoming out as of now. So on the higher side, 820 is where the immediate resistance for the stock is. So just a pullback move can be expected, but no signs of a big directional move coming in soon.
So that's with regards to where charts are concerned for PNB Housing, but shifting focus to the Jio IPO, which is going to launch soon, and we have Somin joining us, telling us why the IPO not necessarily means that the company will hike its tariffs. Over to you, Somin.
Well, yes, since Reliance Industries has made this announcement that Jio Platforms IPO will be coming in the first half of next calendar year, there's a new improved wave of buying when it comes to telecom space. And one of the reasons behind this is also that the fact that they're expecting there would be a tariff hike very soon that could be announced, given the fact that Jio Platform is coming up with an IPO. But we have listed out 6 reasons here which show that there won't be actually a tariff hike just because Jio Platform is coming out with an IPO. The first reason is the fact that the base tariff hike has already been done, with multiple telecom companies discontinuing their base plan of 249. And with this move, if you look at the entry-level pricing that is there in India at this moment, is no longer the lowest. Earlier, Indian mobile tariff plans were the lowest globally, but right now they are not. The second reason is private player plans have been expensive than the public. Now, this is because of the base tariff plan going out. Reliance Jio plans are now expensive than that of BSNL. And do remember that BSNL has ramped up its 4G network and is also in works with to launch its 5G network. Now, and in past we have continuously seen that Jio has gained more subscribers from BSNL, and if their plans now become much more expensive, then this tariff gain, this customer gain would not happen for Jio. And in past also, Jio has focused more on gaining subscribers rather than ARPU. Now, if you look at the third reason that we have pointed out here, is the fact that the weakest player will be the major beneficiary if at all there is a tariff hike. And the weakest player in the industry right now is Vodafone Idea, and that company will stand to benefit the most if at all there is a tariff hike, because Jio would again focus more on gaining subscribers from Vodafone Idea, like it has been doing in the past. So that is another reason why Jio might not actually go ahead and do a tariff hike. The fourth reason here is that a major tariff hike was taken last year in June 2024, and generally what we have seen, the trend has been that there has been a gap of nearly 2.5 years between each tariff hike. Now, the first major tariff hike was taken in December 2019 of around 30 to 35%. The second major tariff hike was taken in December 2021, a gap of 2 years, and the hike was around 20 to 25%. Third major tariff hike was taken in June 2024, a gap of around 2.5 years, and that was around 15 to 20%. So most likely, this time also the tariff hike would be announced at least after a gap of 2 years. Now, the fifth reason here is that the operator commentary was also not quite optimistic. In fact, both Vodafone Idea and Airtel didn't sound quite optimistic on the Q1 call. Vodafone Idea clearly said that they do not have much room to increase tariffs at the lower end, and Airtel clearly said that the entry-level pricing should not potentially go up from the current levels. And the last and the most important reason is the fact that the investors who have invested in Jio Platform back in 2020 are already sitting on handsome gains, and they would not want much more gains at the cost of subscriber losses that Jio Platform would see. Now, if you look at the gains that the investors of Jio Platform have seen since 2020 till now, Facebook, who invested close to 43,600 crore rupees back in 2020, acquired around 10% stake. Its value, the value of this stake is close to around 1,19,000 crore rupees, which is a CAGR return of around 80-odd%. Google 33,700 crore investment, 7.73% stake. This stake is valued at close to 92,000 crore, again a CAGR return of 18%. Multiple PE investors infused close to 48,600 crore for a 9.9% stake, valued at close to 1,18,000 crore right now. CAGR return of 16-odd%. Sovereign funds have also seen a CAGR return of 16-odd%. A total of multiple investors who got around 32.97% stake in Jio platform have seen a CAGR return of 17.1%, which is way ahead of what they get in the US market. So that is also one of the reasons what would not prompt Jio platform to go ahead and take a tariff hike for its telecom business at this moment.
Okay, so Amit, thank you so much for bringing us those details. Quite a comprehensive view on the entire Jio IPO and of course what that means. But with that, reduction in GST rates would have an impact over the longer term, according to Sridhar Sivaram, who's the investment director at Enam Holdings. Listen in to what he had to say about the GST reforms, and we'll be right back after a break.
We've been saying earlier that a direct tax cut benefits only 2 to 3% of the population, whereas any change in the indirect tax benefits 140 crore people and has a far-reaching impact. So I'm happy to see what has happened on the GST side, because this will have a much greater impact, but over time. So I think the problem is market often expects everything to happen the next day. That may not happen. We have a lot of other issues on the geopolitical side or on the macro side. But if you ask me, from the government side and RBI, they've done so much. There's only that much they can do. The rest is up to the corporates and the earnings and all the other factors to play out.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching India Market Close with us here on NDTV Profit. I have with us Kunal Shah, Mirae Asset Sher Khan, joining us on the technical side. We also will have a fundamental expert joining us shortly. Kunal, first off, your views with regard to the index itself. It's been quite a few days of sluggish moves now. What are you penciling in? What are you anticipating? Is there a breakout either way at some point which will evidently come through?
Good afternoon, everyone. See, what we have seen in the market, the correction which we started from the top of around the mark of 26,000 levels. So we have corrected towards 24,200. So we are trading in a downtrend. There was a pullback which we had, and in this downtrend, whatever positive news we are getting, that has been sold into. So till the time Nifty doesn't surpass 25,000 mark on the higher end, which is a strong resistance, the view continues to remain sideways to negative for the market. In today's trading session, on an intraday perspective, Nifty break the 20 DMA. Again, the structure remains as a sell-on rise mode for the markets. The lower end support for the market is placed at 24,400, and once that is breached on the downside, then you can expect the markets heading toward 24,200, even 24,000 levels on the downside. So currently for Nifty, I'll be a sell-on rise market. Bounces should be utilized as a selling opportunity. Now for the Bank Nifty, this has been the weak index where we have already seen that the index has been trading in a downtrend. Even in the pullback, what we got, we couldn't even break 54,500 on the higher end. So clear-cut strong resistance, which is visible on the higher end. And once the swing low of Bank Nifty, which is 53,550 zone on the downside, which is breached, expect Bank Nifty to test the 200 DMA, which is placed at 53,000 on the downside. So overall, Bank Nifty looks much more weaker compared to the Nifty index. For Bank Nifty, I think on the sell side, the risk to reward ratio is favorable. 54,500 should be a stop loss on the upside, and one can look for targets of 53,000 on the downside for the Bank Nifty index.
Okay, go short, right? And the Bank Nifty short call has come in now twice, because this morning also we had a couple of experts talking about going short on the Bank Nifty. Kunal is pretty much saying the same thing as well. Kunal, just before we get to the ideas, what could drive the Bank Nifty lower? What are the banking stocks that you would be negative on?
Yeah, I think the top two banks where the highest weightage is HDFC and ICICI Bank, and they have been doing both the stocks. If I look at it, We have been seeing some buying interest from the lower levels, but I think the weakness will come in ICICI Bank. Already trading below the short-term moving averages, and probably that would drag the stock lower, and we could test the gap zone on the downside, which is placed at 1360, 1350 zone. So that is where I expect ICICI Bank till the time the 20 DMA, which is placed at 1420, is not taken out. ICICI Bank could continue to add selling pressure on the Bank Nifty index.
Interesting. And your picks for this afternoon, Kunal?
See, on the stock perspective, what we have seen that metals have been doing quite well in this weak markets, and metals could continue with outperformance going forward, and that is where one should be focusing even for the next 10 to 15 days. So we are bullish on the metal index. Hindalco could be a top performer again, where 770, 790 targets could be achieved on the higher end. But the stock pick from my end, first is Bharti Airtel. I think looks extremely good on the chart from the current perspective. It has been consolidating in a narrow range, and now we have seen a breakout above the 20 DMA. So this could push the momentum higher. 1860 should be a stop loss, and 1960, 1980 should be a target on the higher end. The second is on the sell side, and that is NHPC. NHPC, again, the trend looks on the downside. Already the stock has breached the support zone of 80-81. And again, trading in a low top, low bottom formation. So that is a sell for me. Stop loss of 81. Target should be 75 to 74 on the downside.
Kunal, you spoke about the metal index, and I'm curious to know, we've seen a very solid rally on the metal index already. Tata Steel from 130 odd has moved up to now nearly 170, which is its 52-week high. Can it breach it? Is Tata Steel on your buy list at all? What are the levels that you look out for?
See, Tata Steel, again, I will wait for some more confirmation because 170 has been the strong hurdle for the stock. 4 times I can see on the technical charts where the stock has seen some selling pressure, and that needs to be taken out decisively. Once it takes out the 170, then we can say that the new trend for the stock has started and it would go towards the mark of 183, 184. Overall, the setup looks positive, but Tata Steel has been one such stock where the failure has been very high on the higher levels. So let's wait for a breakout above 170, and then probably one can go aggressive long on Tata Steel.
Okay, another stock which very close to its 52-week high is a TD Power. It's clocked a double-digit rise in Q1 earnings, which is of course now dated. The company has very ambitious targets for H2, and my colleague Anushi spoke to Nikhil Kumar of TD Power Systems to discuss the company's capex plans and order book outlook. Listening.
I just want to start off this conversation, by looking at the first quarter set of numbers. In fact, you had also given that you might upstate this guidance going forward in the upcoming quarter. So just want to understand the key growth levers that we are looking at for FY26 and even for FY27. So if you can give us a near-term and a medium-term picture.
The order inflow that we are experiencing right now in Q2 is extremely strong. Unfortunately, I can't disclose the numbers to you. All I can say is that it's more than what we even expected, and we'll be reporting very, very strong order inflow numbers at the end of our H1, the end of Q2. With this order inflow, we are very confident that we can upgrade our guidance for this current year as well as for next year, because we seem to deliver these machines for which we're booking the orders. And on that basis, we're going to upgrade the guidance. Those exact numbers also will be given at the end of H1. I'm not entitled to right now sharing the exact numbers with you at this point of time.
Particular range in terms of what's the kind of shift that we are looking from this 1,500 crore of revenue number that you've given for FY26?
It's hard for me, but it will be really good. I mean, it's hard to give a number right now. I can't. It's just not. It's not allowed actually to give a number right now. I have to wait until the end of the quarter.
Okay, you mentioned about strong order inflows in picture. So if we look at the first quarter, we've seen about a 32% of an uptick here, and this is with an order book positioning of 1,468 crore that we are looking at. Just want to understand the current overall order book that you have. What's the kind of execution period that we are looking for that, and if you have any picture in terms of overall inflows target for this particular fiscal year?
Yeah, so the execution period is between 3 months and 12 months. So most of all our order book has to be executed within the next 12 months. Most of it is between, let's say, 3 months and 8 months. So it will all come within this financial year. Mostly it will come within this financial year. Part of it will go to next financial year. The numbers that you talked about in order inflow, you said 32% for Q1 on Q1 basis. That's we are going to be somewhere in that region again. For what we see in terms of increases. So we can expect very, very positive numbers coming into the company at the end of H1.
In which particular segments or products that you're seeing more of these order inflows coming into picture?
So while the growth is across all sectors, I mean, when I say across all sectors, I mean we're doing well in the steam turbine business, hydro business, and the biggest growth we're seeing is coming in from the gas engine and gas turbine business. And this is primarily led by a lot of orders coming in from the US market and the European market. US market is mainly driven by the huge demand coming in from AI, server farms, AI data centers. Europe is more driven by orders coming in for grid stabilization units and basic power generation. The US is going to continue to be a very, very important market for us because the demand for power is very high over there. Unfortunately, India-US trade relationships have been severely hit by the 50% duty. But I will talk a little bit more about that, about how TDP is going to mitigate and mitigation strategies, because we have a plant in Turkey. So we'll have to start shifting our production to Turkey for the US market.
Nikhil, just a follow-up on that point that you mentioned, you are planning to, shift some of the operations that we are doing in terms of generators. This is the particular segment that you mentioned in the con call as well, to another country to avail these lower tariffs that we are looking at. Just want to understand an overall contribution that you currently have from US. It's in the range of 15 to 20%, I believe. So would there be an impact in terms of financials that you are seeing? The Turkey plant, is that, the capacity over there, is that enough to satisfy the kind of needs that you have in terms of order inflows? Would that result in kind of delays in terms of these inflow numbers that that are there, since you have strong projections for this fiscal year as well?
Short term, on a console basis, there won't be any impact. Of course, when you're shifting production out of the parent company and shifting it into the subsidiary company, then obviously the parent company numbers will go down a little bit, but the subsidiary numbers will go up a little bit. So on a console basis, we will see a net zero effect. So we're not going to see any negative effect of shifting production out on the overall console numbers. Now, the second question about whether Turkey has sufficient capacity. We have sufficient capacity for the short term. When I say short term, I mean next 3 to 6 months, we will be able to fulfill the orders what our customers are giving to us. But is it going to be able to meet the growth requirements that we see in the US market? No. So we will have to look at another location where we can make investments more for the long term. And whether we want to do that in Turkey or whether we want to do another country, that discussion is underway internally, and then we'll take a call soon.
Okay, so that's the management of TD Power, 2.5% higher, that stock as well. And curious to know, Kunal, would TD Power feature on your list of interesting stocks to keep track of? And if not that, what within the power space looks attractive at this point to you?
Yeah, I think first definitely TD Power System looks attractive on the technical charts. Now it has surpassed its 52-week high as well, and now we can expect further upside level. Already the breakout had come in around the mark of 525, so that will act as a very strong support on the downside. You can expect the stock to go towards 590, 600 in the very short term.
So that's on TD Power. The other set of stocks which have really done very, very well this week is the Nifty Auto Pack. Any favorites within that, Kunal?
So for the Nifty Auto Packs, we have already seen a sharp rally. But one stock we have to highlight over here is Ashok Leyland. The stock has just come out of the breakout, and it has been seeing buying interest at the lower levels. I'm sorry. And you can expect further upside levels towards 142 to 148 on the higher end in the very short term. So Ashok Leyland is a buy for me. Stop loss on the downside should be placed at 124.
Okay, Ashok Leyland. Kunal will give you a bit of a breather. What we'll do in the meantime is go across to the casualty of the day, and we have Puneet waiting by. Whether I can call it the casualty of the day.
It's only for the day.
Or suggest that after what's been an outstanding couple of weeks, this one is just about seeing some bit of a downtick, and a substantial bit of a downtick, if I can call it.
You're being kinder than me. Yeah.
Ola Electric, Puneet, take it away.
Well, thank you for that. So definitely one of the biggest movers in the last 1 month, almost of 55 to 60% is what the returns that the company has given in this particular time frame. Despite this fall that we are seeing today in the market, stocks still up 47%. So it's definitely one that has helped investors. There were a couple of news flows which was today. SoftBank has sold roughly 2.15% stake in the open market, and with that, their stake has now reduced to about 15% odd. That will not be an overhang per se, but it will be something to watch out for investors. That's one. On the opposite side, we did see a positive brokerage note coming in from Goldman Sachs. They've actually increased the target price on Ola Electric. Now they see it at 72 rupees versus 63 earlier, and they've said that the recent measures, and we've discussed this a lot in the last 1 month, of investing in battery cell manufacturing, using those cells within their own scooters is one of the key aspects. Apart from that, Goldman Sachs has also mentioned some 2 to 3 key points. The first one is that they will now pursue 5 gigawatt of battery capacity versus the earlier plan of 20, but they will not be available to get PLI benefits now, because you have to be till 20 gigawatt hour to get any kind of PLI benefits. So that was already baked into margins, will have to be removed, if any, by the analysts. The other key points for Goldman Sachs, apart from this, they've highlighted that PLI certificates for Gen 3 has been obtained. Apart from that, there are multiple triggers that they've been able to maintain their market share in August, as well as announcing the launch of their performance scooter early next year. Those are some of the key highlights from Goldman's note. I also just want to finally end with market share, because we have been talking about and getting newer data to you every time we've done this. So this time I've just looked at the year-to-date performance as well. And here is where it gets interesting, because it's very neck and neck for Bajaj Auto as well as Ola Electric for the number 2 and the number 3 spot. We've highlighted that within August, we saw someone like Ather Energy make an up move, and now they're at 14.8%. versus about 11% in the same time last year. If you take the first 5 months of FY25, they were somewhere around 11 to 12%. They've inched up to 14.8. But look at how neck and neck someone like Bajaj Auto and Ola Electric are. 95,000 units is what they've sold in FY26. And hence, Bajaj has had an off month. Almost 50% of its sale has just got blown out because of the rare earth crisis. So they are expected to come back. So rather than moving upward, there could be a possibility that we could see some kind of intense competition from the likes of Ather to Ola Electric, and for the number 3 spot going each month. That'll be something to watch out for. But a stock that's done very well for its investors recently, but still down from roughly about 157 rupees per share. It did hit a low of 39 before we saw the recovery. So valuations at roughly about 4 times EV to sales, because it's not profitable, does price in a little bit of growth for now, but it's a stock which definitely should keep on your radar.
1 month returns of 46%. That's what really stands out for me, Puneet. Thank you for that. Kunal, Ola Electric, more legs to go, or is this just a bit of a blip on the road upwards?
Yeah, I think overall we have seen strong buying interest from the lower levels, and I think last time also we spoke, I think 65, 67 is the level what we assume where the profit booking would kick in. The stock obviously went till 71, but I think it was a good level to book profits around those mark. Now the support zone on the downside for the stock is placed at 52, 53 zone. Probably from those levels, you will see again the buying interest coming in, and again the stock could go towards the mark of 60. So wait for a dip. There is further downside left. 52, 53 could be a good buying zone for the stock.
Okay. Yeah, just viewers keep in mind, I mean, I think after Ola went up from 40 to 52, and the day when he had a 20% circuit, the next day it was down 7%, par for the course, frankly. Yeah. And then it's resumed its uptake. Now, Kunal is a better expert. I don't think me or Harsh have an idea of what the stock will do tomorrow or day after or in 1 month's time per se, right? But mind you, this is happening also at a point of time when there is a brokerage note which has come out from Goldman, if I'm not wrong, and hiked the target price to 73 as well. But the good part, Harsh, about this is that after having this breakneck rally, there are experts who had come and said that it's just been so stupendous that at 65 it could hit a bit of a upper ceiling limit and then correct a bit. I think that's what I think Kunal was saying, that this is probably that healthy correction that everybody was talking about. So keep an eye out for this. You know, the other thing, Harsh, just bring it out. What have brokerages said and what have the managements of the insurance companies said about insurance? Because today we started off with a bit of a tailwind for insurance companies after HDFC Life clarification. So what came out from there?
So a couple of insurers came out and clarified this. They suggested that their embedded value will get hit by around 0.5% for an HDFC Life and about 1% for ICICI Pru. What this essentially means is that there's going to be a slightly higher load of GST which they are going to have to bear, simply because their customers are not going to have to bear absolutely any GST. So they're going to have to absorb some of the GST which are embedded in their costs. And that may impact their margins as well as their embedded value by around 0.5% to 1%. This is of course far lower than what most would have penciled in, because one would have expected that around 1.5% to 2% is what this cost would entail. How much of this gets passed through? Both of those were non-committal, but they were really positive with regard to the development itself, Neeraj. The fact that 18% GST is now reduced to nil means that there's going to be strong demand which will come through, and really that's the tailwind which both those companies which came out with disclosures focused on, saying that this is very positive. In fact, we spoke with Yashish Dahiya yesterday, and he was also of the view that term life especially was the product to focus on, because that's where the big moves have happened, where 18 has become 0, and it's a signal of intent from the government to say, hey, we're out there to support protection, which is positive.
Yeah, you know, and Kunal, that is the point. So yesterday these stocks, I mean, so Harsh, thanks for bringing that fundamental piece, right? Now, Kunal, the idea is try and figure out what to do with these stocks, because while they started off very well, on Thursday morning itself, we were questioning the uptick, because management after management came in and said that we're not 100% sure of what kind of operational benefits coming from here. The stocks have corrected. Yesterday, they've given some positive commentary. After that, the stocks have rebounded a little bit, but they've given up those gains as well. Is the upside capped from a trading perspective on the life insurers?
See, I think on the upside, yes, definitely you will need to have much more clarity in the next week, and probably more 2 to 3 trading sessions would give you a clear view where the direction is. Right now, I think just I'll update on SBI Life. I think the long-term chart still looks very attractive to me, and I think dips could be a good opportunity to buy. If anybody is already holding long into SBI Life, then I will give a positional stop loss where one can exit on it if certain levels are breached. The downside is 1735. This is what one should keep on your radar. If that is breached on the downside, then the correction could come towards the mark of 1550, 1500 as well. So I think if you are holding for a trading perspective as well on the long side, 1735. Even if you are holding for a long term, 1735 should act as a stop loss on the downside.
Okay. And Neeraj Diwan is with us as well. Neeraj, thank you for joining in. Can we start off by talking about this one piece first, which is insurance? Because there is the funda take required to understand whether it's worth buying into insurance because of this, or is the situation still hazy?
Yeah, good afternoon. I think as far as the GST is concerned, there's definitely going to be some impact. There will be some demand improvement which may happen because of this, because even if you talk about health insurance, life insurance, premiums are getting expensive. So this will get the premiums down to some extent because of zero GST in life and health. So some demand pickup will definitely happen. But if you see most of these life insurance companies, they have recently given a decent move also. Though over the last 4-5 years, the return has not been significant. But last, if you see 6 months or 1 year, they have given a decent return. So in the short term, maybe I think they may not move too much. But I think if this demand actually really is there, and they're able to deliver those numbers going ahead, then I think they will make a case. So I think one should wait and see how numbers will pan out based on the demand pickup, because most of these actually they are supposed to announce their numbers almost every month. So you get an idea what sort of pickup is happening as far as new premiums are concerned and bookings are concerned. So I think one should wait and see and then take a further view on these stocks.
Okay, all right. So that's the funda take on insurance coming through. Of course, HDFC Life, you can pull up the 5-day chart. Really good rally yesterday. We've seen a bit of a cool off and currently sitting just about 1% in the greens. We've seen that bit of cool off come through after those spikes that we saw yesterday. But onto our bull versus bear segment, because where we're really seeing a cool off today is IT, and therefore we've picked Persistent Systems for the bull versus bear. Stock is down 3%, top loser on the Nifty IT, I would believe. Puneet joins us with all of the details. Puneet.
Well, thank you for that. Largely picking, as you rightly mentioned, as the top Nifty loser, that was one of the key triggers. The other key aspect is amidst this tariff tantrum, IT has largely been away from, all this, any kind of tariff that we could see up until now, at least, on services segment. But despite those positive triggers, we have seen selling across the board on the Nifty IT. We haven't seen any kind of recovery, and Persistent is also one of them. Today down almost 3%, as you rightly said. So let's look at the first bull and bear case, and we've tried to go something different post Q1 results, and we've tried to give some more nuance to it. So we did mention that during the Q1 results as well, that it was a strong deal wins in Q1, but this was also the second best and the strongest deal wins momentum that the company has seen in the last 5 years. So that was one of the key triggers. But the larger point of coming to roughly $2 billion in terms of revenue by FY27 has starting to sow some seeds of doubt essentially from brokerages like Citi. Probably the first one to come out and mention that this could be a tough ask for the company to reach, given the current momentum of negativity amongst others for something like a Persistent. So that's the bull and bear case number one. When you look at the second bull and bear case, that's largely on the growth momentum that BFSI or banking, financial services as well as insurance has seen in this year. We are expected that the growth will be led by this division, but both Citi as well as CLSA have trimmed target prices. They see divisions like healthcare will drag the momentum downward in terms of growth for Persistent. Finally, in terms of valuation, it's a 32 times price to earnings for FY27, almost 44 times for FY26, so it's cheap. By no means is this counter as well. When you also look at other counters like Coforge, where you see a huge pivot in earnings in FY26, almost a 60% EPS CAGR is what we're expecting for Coforge. We are still expecting a decent momentum. That's of course led by acquisitions for Coforge. But despite having a higher growth rate, Coforge and Persistent are trading at similar valuations of 31 to 32 times price to earnings. So keep that in mind. It's not cheap by any means, but the company is looking at new verticals, like the 4 pillars essentially of growth under the AI strategy of the company. They are looking to invest heavily there. They have done that, and probably seeing some kind of revival from there as well. Brokerages, largely maintaining their buy calls. We've seen someone like Investec maintain the hold rating, but the others maintaining their target prices. So maintaining the buy calls, but reducing the target price has started. So overall, that's the bull and bear case for Persistent. Watch out for the other ones in the IT space as well, because going into Q2 earnings, these will start to get back in focus.
Well, the big possible contra play here, Puneet, and of course, we will also await the fact that there are rate cuts on the anvil, where the US Fed is concerned, likely will happen sometime in the next 15 days or so. And whether that really has an impact on IT stocks or not, it certainly will be something that the market as a whole will look out for, Neeraj, because any indication of a further direction of more possible cuts coming through could well mean or well bode well for IT.
Yeah, I think, well, a lot hinges on that. And if you heard what the management of Mphasis had to tell us, fairly buoyant on things ahead. Couldn't give a guidance. It's an industry in a bit of a flux, but the management was fairly constructive on a lot of things, including the newer tie-ups that they have done. And therefore, that begets the question as to whether the valuations are in favor for select IT names to be bought into. And Neeraj, I wonder if you think of it that way, that we don't know where growth is coming from, but cash flow-led valuations and relative to history valuations, are these stocks looking like they might be having limited downside versus possibly higher upsides?
Yeah, actually, if you talk about historical valuations, definitely, when you see the large stock like Infosys, TCS, they're trading at discount to their long-term, historical averages. So based on that, definitely it makes a case, because a lot of times there have been talks about some slowdown, but they've always come out stronger and given you the returns. But there may be some difference right now. There's a confusion among, I think, a lot of the market participants about, if there's an interest rate cut and things pick up in US, some business pickup happens there, deal flows improve, will be good for them. But then, there are these other visa issues, which, US may do something about, which may impact these companies. So that can also be one, trigger point for a further leg down for these stocks. So in the short term, definitely there's uncertainty. But if you talk about longer term, the valuations are attractive. So even if there's a knee-jerk reaction because of any news flow, I think that will be bought into, looking at the current valuation they are trading at. So I think for a long-term investor, it may make sense, but I think still there is a lot of, confusion which is there, and you need some more clarity.
Interesting nugget here, and Neeraj. A TCS, which is down 1.5% today, mind you, and very, very curious to know Kunal's view on this as well, has given zero return since January of 2021. I'm not so sure as to how many such periods of 4+ years, 4.5 years, some of these stocks have given zero returns for. But I'd reckon it wouldn't be too common over the course of maybe the last 25 years. May not be more than 2-3 times. So clearly, it's only a question of whether this is as big an opportunity. And take your point on this, Neeraj, as well. Kunal, your view with regard to some of these IT names, 1.5% lower on the Nifty IT, as well as on some of the larger cap names as well. TCS and Infosys, all of those are also seeing some bit of pressure in trade today. Good time to buy?
See, I think overall, if you look at the Nifty IT index, December 24, that is when the IT index topped out around the mark of 46,000, and we saw the correction towards that 30,000 mark. Post that, we have seen a pullback again towards the mark of 39, 40,000, and again we witnessed a correction on the downside. So if you look at the larger term trend for Nifty IT, it has been trading in a downtrend. So the trend is V, where you are seeing the Nasdaq making an all-time high levels. But it's the RIT index which has been completely on a divergence front, where we are making low top, low bottom formation. So I think still some downside is left for the IT space. Today, Nifty IT index has given us a breakdown below the 20 DMA, and the swing low what we had recently made for the IT index around 34,200, that is going to get breached in the coming week, and IT index is headed lower toward 33,000, 32,000 mark on the downside. So still some downside left for the indices at the current level. I will not be a buyer at the current levels for the IT names, and I think TCS can come down towards the mark of 2,800 zone, and probably those could be the levels where one could look to go on the long side.
Okay, so still some time to go. Hold on to your horses is what Kunal believes, certainly. From a longer term perspective, Neeraj, obviously positive with regard to IT. But it's time to take a quick short break. We leave you with an important word coming in from Navneet Munot, MD and CEO at HDFC AMC. He said that India has now become Atmanirbhar when it comes to capital markets, and India is becoming a nation of investors. Listen in, and we'll be right back.
I think we have to look at it in the context of the GDP that we have, the savings that we have. India has been a nation of savers for generations. What we are doing now is becoming a nation of investors. And I think this is very good for the economy. In a way, we can say that with pride that we have become Atmanirbhar when it comes to capital market. Now, I won't say that we don't need foreign savings. I think our investment needs are humongous. Humongous. We need more foreign flows for sure. And at some stage, it's likely to come both in the form of FDI as well as in the form of FPI. Now, I give you one data point. If I look at United States, there would be $50 trillion of institutional money which can potentially look at India as an asset class.
Okay.
Think about 1% switch. What amount that is? $500 billion. Now, to put that number in context, we have hardly got any money in last 5 years. But the potential for us to convert 1% of their investment assets today is $500 billion. That's $500 billion. That's why I've been harping on the point that what we need to do as an economy is to increase the absorption capacity of the capital.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Bring up the markets for you because it's an afternoon of trade which is looking very tepid now. It's completely flattened out. And remember, this is one of the reasons could well be that one, that the markets have had a bit of an activity, and two, ahead of the key August non-farm payroll data, because that may have a big impact on how the US markets do today. If indeed that data is very weak, then the US markets may do well. But if the data, the payroll data is actually looking okay from a payrolls perspective, the markets may give up some of the recent gains, the US markets. And hence, I think there's a bit of indecision, if you will, in today's trade for the equity markets. So bear that in mind. But within that space, there are stocks which are in the spotlight, clutch of them. Vansh has chosen 3 of these, and he joins in right now. Vansh.
Yes, so let me start off with PNC Infratech. Now the company has received, company has emerged as the lowest bidder for the tender floated by the Bihar Road Development Corporation. Now that order was worth about 495 odd crores, and after this the order book under execution as of Q1 for the company stood at 17,000 odd crores. Company also received the order for the development of Varanasi Airport on Wednesday as well. Now the value of the development of that project was also stood at 297 odd crore, and the project was to be scheduled to complete in 18 months. Second on my list is Biocon. Now the stock is also up. Now the company has received a Form 483 with 5 observations from US FD. However, none of the observations pertain to data integrity or non-compliance as well. The third on my list is Bluestone Jewelry. Now this one is an interesting one. In fact, they got listed on the exchange on 19th of August. Now they have come up with their Q1 set of numbers, and numbers look strong. If I talk about the details, the same store sales growth has been up by 18% on year-on-year basis. The repeat revenue ratio was at 50%, and the number of customers that has increased by 34%. And lastly, the average order value was up by 23%. And lastly, in terms of the financials, what really stood out was the revenue that was up by 41%, and the net loss that has narrowed to 34 odd crores versus a loss of 59 odd crores. So these are some of the stocks that remain in focus today.
Okay, all right. Thank you for that, Vansh. Thanks for coming in and giving us that perspective. Kunal, any of these on your radar? Of course, a Bluestone recently listed, but outside of that?
See, I think overall, I think the market looks sideways. Overnight, I would not be carrying any positions on the long side. So probably I will say avoid it. Probably next week could be a better place where we can take a fresh outlook on the markets.
I'm also curious to know, what's the take, Neeraj, with regard to something like a BSE? That stock has come back to the fore after the expiry date has been now changed. There's been a swap there between Tuesday and Thursday. So what is it? What's your sense at this point with regard to a BSE? Because we're seeing plenty of buzz on the stock, at least today. So give us your take.
Okay, I think after the correction, it looks attractive again. Volumes will pick up, though the expiry dates have changed, or there was a talk about, weekly expiry, changing to fortnightly. There are a lot of negatives which were there, and which I think got priced in when the stock corrected. So I think volumes will, because looking at the market scenario, and we are positive for the second half of the year, and with the GST cuts, volumes may pick up as far as markets are concerned. So I think that the correction is over, and you should use the dips now to accumulate stock like BSE or other related capital markets stocks.
Okay, all right. So good time to accumulate. While we're talking financials, Neeraj, also curious to know, there's one other stock which has done extremely well over the last 5 days. Let's pull up a one MobiKwik, and that one has done ever so well. Let's quickly pull up the 5-day chart and get that perspective. Of course, 4% up today, but over the last 5 days, stock is up 32% in trade. So you're seeing some real strong move here. Neeraj, do you have a view with regard to a one MobiKwik, and is this a space that you believe can give the kind of returns which we've seen one MobiKwik give?
Yeah, I like this space definitely. Okay. I don't have the valuations for MobiKwik. I think this space should do well. Even stocks like Paytm has been doing so well, and which I continue to be positive on. So the space will be good, will give you decent return, but specifically on valuations of MobiKwik, I can't comment right now.
So I'll give you some perspective because I track the space as well. One MobiKwik is at around 2,300 crore in terms of market cap and trades at around 2 times sales. Would that be something that you would find attractive, given that Paytm trades at 6+ times?
Yeah, looking at the market share and looking at other dynamics also, MobiKwik will definitely trade at a discount to Paytm, but at 2 times sales, I think there is definitely some upside potential which the stock has.
Okay, so positive with regard to that one. Kunal, would you bother give us a view with regard to both of these, a BSE, a one MobiKwik on charts, because some real big moves. I know one MobiKwik chart will be extremely limited for you, but give us your sense if you can.
I think for one MobiKwik, already we have seen a sharp rally from 220 to almost 300 levels. So 50% rally has been seen in the last 3 to 4 trading sessions. So definitely no point entering on the long side at the current levels. The lower end support for the stock is now visible around the mark of 280, 275. So that could be a good opportunity to again initiate on the long side. And you can see further high levels of 330, 340 coming in for MobiKwik. So wait for dips, decline. That could be a better opportunity to go on the long side.
Okay, and then there are some volume buzzers, of course, and we've discussed some of these, Neeraj. Something like a Sunteck stock is perked up, I believe, 15%, if I'm not wrong, and 30 times volume, so very, very strong volumes. The other one is SKF India. I wonder, okay, 13% at this point. SKF India is the other one where you're seeing decentish kind of volumes. Prism Johnson, GMDC, Red Tape, all of those are doing fairly well. Can we have that table with regard to volumes, and that will give us a perspective. There you go. So volume buzzers, and along with it some moves that we're seeing. Real estate, and within that Sunteck Realty really shining today. Neeraj, do you have a view with regard to this one? Of course, it was a stock of the day and we kind of broke it down. But on the fundamental side, do you have a view with regard to real estate, and Bombay real estate especially, because Sunteck is tilted towards that?
Yeah, I'm positive on real estate, specifically more the Bombay real estate. NCR right now, there is definitely that pickup which everyone is waiting for. But it's not picking up, so people are expecting maybe around Diwali when you get pickup happening as far as real estate is concerned in NCR. So that, of course, I'm positive as far as valuations are concerned, but I'm still waiting for the pickup to see the pickup. But Bombay, I think definitely the demand has been strong, and I feel that real estate after the recent GST cuts in cement, and the execution pickup should also happen, and interest rates are low, so everything is good for them, and demand is also strong. So I think the real estate should do well, over the medium to short term also.
Okay, now, this big news that is coming in further, right? This morning we spoke about how MOD has done some announcements or decisions with regards to defense. This is an NDTV news that is coming in, that this is the biggest defense boost, I think, since independence that India has announced. Air Force will acquire multiple equipment pieces. The government has unveiled this upgrade plan. It's an upgrade plan that has been unveiled. Defense, it's a 15-year, multi-billion-dollar plan that the government is given out. A roadmap includes nuclear-powered warships, next-generation battle tanks as well. So that's the other piece. And the army will induct nearly 1,800 future tanks to replace T-72 fleet and multiple other things. So a clutch of line items, different verticals, multi-billion-dollar opportunity. And this is big news simply because this comes in after the government, around the period of May or June, allocating a sizable bulk of capex announcements back then. So this is big news, and let's speak more about this and get some more details because I believe Shiv Arur, if I'm not wrong, is joining in. He's got all the details. Shiv, great talking to you. Fill us in. The headline sounds very exciting. The biggest upgrade since independence.
This is a huge 15-year capability roadmap that the Ministry of Defense has unveiled, which basically details what is easily the biggest ever upgrade of weaponry, of military capability since independence. 15 years is a very short time when it comes to a capability roadmap. So this is being seen as a post-Sindoor weaponry capability and vision that has been enunciated by the Modi government in terms terms of what kinds of weapons it wants the Army, Navy and the Air Force to have over the next 15 years. So many of these weapons are already in development and they will be entering service, but this is one of the most ambitious upgrades that has ever been put to paper, and NDTV has a copy of that vision which basically details mountain tanks, and you've got pictures here of Vishnu and me on the Indian Army's new mountain tank that they will be getting very, very soon. The Indian Navy will have nuclear powered warships, a next generation aircraft carrier, long range hypersonic missiles, directed energy weapons, including laser based weapons, long range stealth bomber drones, long range pseudo satellites, all of these swarming drones, artificial intelligence built into our weaponry. All of this makes it easily the most significant defense and military hardware boost since independence. The reason for this, of course, is also that India is a war-fighting nation now. Sindoor came out of nowhere. India continues to be a target of terrorists, cross-border terrorists as well. The world is changing. We've got the Chinese threat, even though India has made some peace overtures on that front, but the reality remains that India is a country that remains under threat. It needs to defend itself. It needs to be able to preempt attacks on it, and that's the reason why this 15-year roadmap details some of the most advanced weapons capabilities since independence. You've got electromagnetic based weapons, you've got rail guns, you've got vertically taking off drones that are capable of keeping eye on battlefields, you've got artificial intelligence fueled stealth bomber drones that are able to take out targets without humans in the loop. These are extremely capable futuristic weapons arsenals that have now been basically articulated as part of a vision document and will be implemented over the next 15 years.
Okay, thank you so much for that very detailed download coming in from Shiv Arur. While we're at it, let's actually pull up the Nifty India Defense Index and also its constituents. No real big moves there. Likely this will also be a stretched timeline with regard to where delivery is concerned, but you can see some moves coming through with regard to a Bharat Dynamics, a BEML, a Data Patterns. Some of those have moved. Neeraj Diwan, of course, this is a multi-year opportunity or a multi-decade opportunity, if I can call it. How should one play this? Are there some names on your mind? You've obviously heard Shiv detail that down as to what this is going to entail. So give us that perspective.
See, definitely long-term defense looks attractive. Though shorter term, it had run up a lot, but then even from the peaks that we saw earlier in the year after Operation Sindoor, some of the stocks have corrected to about 15%, 20% from those highs. So it again, for a long-term investor, it makes sense to buy even at today's level or accumulate if you see dips, because this is a story which will keep on playing out and it's going to be. But then one thing one has to understand that these orders are long-term orders. Supply will not happen every 3 months or 6 months. Some orders will get executed over a couple of years, 3 years, 5 years. So it's good. It's a long gestation. For something like a ship or an aircraft or related orders, it takes a longer time. So one has to be long-term investor in the stock, and they will, according to my understanding, will make money even investing at today's prices. Some of the stocks which I like also something like a BEML, which is into defense and railways and metro, which is a good company and they have huge orders, so they can definitely gain from this news flow also. Plus, they have other metro orders which keep on coming their way. Armored vehicles, battle tank refurbishment. They have, they're into a lot of those. So BEML, Data Patterns, Muldoc. These are the companies which one should invest and be a little longer term investor for 2 to 3 years to get the real return from these stocks.
So, Neeraj Diwan, putting this into perspective, it's a little more cautious in that sense, and of course, it's a longer term approach. Also, will be interesting to understand, Neeraj, as to what kind of a role has global geopolitics played in this, because you will have also Russia come in likely. and aid in some of the upgrades that are happening here, or you wouldn't?
No. So I think all countries would want to play a part, right?
Correct.
I don't think India will take a stance that, oh, we'll only use indigenous, because you want the best capabilities out there.
Absolutely.
In that sense. So therefore, and we'll partner with everybody who's a friend. Why not, right? So therefore, I'm sure a lot of other nations are excited when they see an announcement of this nature. We are a large country with a large defense requirement, and if that is what, from a market's perspective, helps capex, so be it. I think a lot of domestic companies as well would be very, very excited about this. So could be interesting. Kunal, can we ask you, we've asked Neeraj about this, want to ask you before we take in your BTST or STBT call, a word on any of the defense name that looks very attractive from a long-term perspective. And then, of course, let's get in your BTST or STBT.
Yeah, I think firstly, the Nifty India Defense has witnessed a good amount of correction from the highs of 9,100 towards the current levels of 7,500. Now, we expect this correction to end somewhere around the mark of 7,200, 7,000 zone, which is the 50% retracement of the entire move which we got from March 2025 for the India Defense, Nifty India Defense. So I think we are near the support zones. You can see majority of the stocks, whether it's an HAL, Masgaon, they are all trading near the 200 DMA and needs to find support around these mark, and probably we can see the rally extending on the higher end. But yes, I think I agree with my colleague as well. I think BEML looks attractive on the technical charts. There is already on the technical chart, there is a triple bottom formation which is there, and it's on the verge of a breakout above 4,150. And once that is taken out, expect this rally to continue towards 4,800 on the higher end. So I think the best part is the risk to reward ratio at the current levels is extremely attractive. The lower end support is placed at 3,800, which is a very strong demand zone, and you can expect the stock to go towards 4,600 to 4,800 on the higher end.
Okay, so those are, that's rather one stock which Kunal seems to be positive with regard to, especially where defense is concerned. STBT, BTST, Kunal, let me egg you on and give us a couple of stocks there.
Yeah, I think on that perspective, I think auto continues to be in strong momentum, bullish on the sector as well. And the pick over here is Hyundai Motors. I think here, again, we are seeing fresh buying interest from the lower levels. The stock could again surpass its all-time high levels again as well. So Hyundai is a buy for me. 2,500 should be a stop loss on the downside. You can expect targets of 2,600 to 2,650 on the higher end.
Okay, so of course that's with regard to Hyundai and auto in particular. Neeraj Diwan, would you have a preference in auto? This kind of rally, do you believe that there can be more legs to it? Is it a larger re-rating which is likely given the kind of GST rate cut and what the impact of that might be?
Yeah, definitely a larger re-rating is happening, which was expected after the announcements were made. Even before that, I was positive on the two-wheeler space. So Honda, Hero Motors or Bajaj have done well lately in the last 2-3 months. They've given a decent return. So I continue to be positive there, but I think the shorter term, because we've seen a good rally in some stocks like Bajaj or a Hero or a Maruti, so I think, or even a TVS, the shorter term, maybe they've got a little stretched. So I think one should wait for some sort of dips to again, accumulate these stocks. Though for longer term, I'm very positive on this whole space.
Okay, all right. Now the GST rate cut, and we just spoke about that. It's also led to a likely rise in demand, which could come through. And according to Jasbir Singh Gujral, who's the managing director at Syrma SGS, he believes that there is certainly a case to be made there. Listening to what else he had to say about the impact he is penciling in and the timeline that he foresees with regard to the uptick in demand. Listen.
GST cuts are nothing short of radical reforms in the terms of putting money in the pocket of a common man. Now, as far as Syrma SGS is concerned, we are primarily into auto, something in consumer durables, and in all those cases, whether it's auto, agricultural, tractors, everything, the GST has been cut drastically by 10%. Now, when that sort of money comes into the pocket of a common man, the guys who are at the sort of lower end of the pyramid, I think it's going to be having a multiplier effect on the demand. And I think let's give us some time, 30, 40, 50 days. I think the demand will kick in very fast and it will be a steep increase in demand.
All right. So that's of course one part of how consumption could likely play out. Neeraj, your top picks within consumption? Okay, Kunal, your top picks within consumption?
I think over here I'll focus on Dabur. I think that looks very attractive to me at the current levels. Already on the technicals, there has been a rounding bottom breakout which has happened. So I think dips is a good buying opportunity for the stock. One can expect the stock to go towards 580, 600 in the very short term. And the stop loss on the downside should be placed at 510.
Okay. And the other thing is what's happening to the likes of Zomato and Swiggy, because that's the other big thing, right? Today, there was a note from Motilal Oswal. There was Morgan Stanley note which says internet businesses are doing very well and shouldn't be and could be actually positive. Motilal has upgraded both Eternal and Swiggy, and the stocks are doing well. Kunal, very quick thoughts here.
See, I think Eternal, again, the longer term trend continues to be on the positive side, but Eternal already has seen a sharp rally, so the risk to reward is not favorable on the long side. If you are already holding wrong from the lower levels, continue to hold because the stock has been taking support at the 20-day moving average, which is placed at 317. So 317 should be a stop loss on the downside on a closing basis for Eternal. For Swiggy, yes, the rally has just started. Already trading in an uptrend here, and this could go towards the mark of 460, 465 in the very short term. So Swiggy could be a buy from the current levels, keeping a stop loss of 420 on the downside.
That's a 4%, near 4% likely on a Swiggy from here. Thank you so much, Kunal. We'll let you go on that note. We're just a minute and a half from close. So let's pull up the Nifty. Actually, it's been a flattish kind of a move, at least today. 24,700 to some extent protected, if I can call it that. Take the positives. Let's look at it intraday as well, and let's look at the week gone by as well. So that's of course the intraday chart. We've recovered decently from the lows, and we've closed absolutely flat. But let's pull up the weekly chart as well, and that's where you're seeing around 1% higher in terms of the move. Of course, we've seen that uptick, and thereafter we've seen a bit of a cool off also on the index, which is what has played out through the week. Now let's talk also a little bit about the heat map today, and that'll give us a sense of the breadth as well. Largely even Steven on the breadth, 25 advances or 27 advances to 23 declines. ITC and IT stocks in particular seem to be the culprit today, and that's where some of the pressure is coming from. Well, auto continues to shine, and that's the one space which continues to do very, very well. The top three stocks on the Nifty 50 index are auto. Shriram Finance also, I dare say, is largely auto financing. So is auto led in terms of the move. So that's the sum and substance, the shape of it. You also have quietly a Reliance Industries, which is up 1.2% in trade. So that seems to have aided the Nifty 50 index, if at all. So I want to quickly mark that out as well. But that's the shape of the Nifty. Let's talk about sectors now, and let's pull up the sectoral heat map. Auto, of course, sitting right up there on the top. Outside of that, metals have done well. Media also has done fairly okay. PSU banking, the PSU banking indexes are up around 0.25%, but the Nifty Bank not lending too much support per se to the Nifty 50, and therefore you're not seeing that kind of buzz. IT on a day like this, 1.4% lower, and that of course doesn't help. And the Nifty FMCG also down 1.4%. So none of those factors really aiding the Nifty in any sort of fashion. The Nifty Bank absolutely flat, largely in line with how the Nifty performed. Let's talk about the advanced decline, and that'll give us perspective also on broader markets and how they have performed. Well, it's been choppy to say the very, very least, but we've closed 1:1 where the advanced decline is concerned, roughly. Advances just about outstripping the declines. Let's talk about the Nifty mid-cap and small-cap indices, and let's look at these even from the 1 week lens. Flat on the Nifty mid-cap. The Nifty small-cap, if you can quickly pull that one up, and there you go, around 0.25% higher on the Nifty small-cap. And let's pull up the weeklies on these as well, because that'll give us a better lens 2% higher on the Nifty small cap. So this one has seen a bit of an outperformance, and we did see that midway through the week that the cool off on the Nifty small cap wasn't as strong as we saw on the Nifty 50 index. The Nifty mid cap also doing fairly well for itself, 1.7% higher. So the broader markets have won, at least where this week is concerned. Last off, the BSE 500 top gainers, top losers. Before I toss it to this very interesting segment, which will tell me what to do all through this weekend. So looking forward to that. Sunteck Realty is the top stock of the day, 15% higher. SKF also seeing very good volume, 6% volume led moved on SKF, and HLE Glasscoat from the lows has done a very, very strong recovery. So that one has done well. RBL Bank, you want to watch out for that one as well, 4% higher on an RBL Bank. Those are some of the losers. Varun Beverages standing out on that GST announcement which has come through. Prestige also down around 3% odd. A Chemplast and a Delta Corp down 3% each. So that kind of wraps up how we've done this week. Let's also talk a little bit about what to watch out for next week, and the foreign exchange reserves, the US and unemployment rate, China forex reserves. Those are just some of the macros to look out for. Let's quickly look at some of the dividend adjustments which will happen come Monday. So those are stocks you want to keep on your radar, and there are quite a few. And then you have shares to exit lock-in. Gala Precision, 7% of the share capital to exit lock-in. What am I supposed to do this weekend? Shreyansi, you're up with a list, so take it away.
Well, absolutely. So this is Popcorn Pulse, and let's take a look at what you can be doing this weekend. So there's not a lot of popcorn that you should be out to get, at least in the cinemas, because there's no big ticket releases, at least as far as movies are concerned. But that doesn't mean that you can't make some at home. Let's take a look at some of the OTT releases that you should keep in mind. The first one is Inspector Chenday. This is on Netflix. It's a crime thriller that you should be looking at. And this is about Charles Sobraj. This is about the officer, in fact, who's arrested Charles Sobraj not once but twice. And he was, of course, known as the Serpent for his ability to slip through the legal system. So this is going to be an interesting watch. And it also has Jim Sarab along with Manoj Bajpayee, as you can see. So keep an eye on this one. This is one that you should be eyeing, but the next one that you should look at is actually the second part of season 2 of Wednesday. Jenny Ortega's back with this one. It's supposed to be more spooky than the last one, more cohesive than its predecessor as well. There is season 1 that I'm talking about, so that's one release to keep in mind. Let's also quickly take a look at the last thing that I have on my list, and it's highest to lowest. Now, this is one release that you should keep in mind on the back of a provoking thriller. If you are in the mood to watch one, this is also one that you should be keeping an eye on. So those are the top 3 releases, at least as far as OTTs are concerned. Nothing much to watch out in terms of movies. But with that, we're completely out of time. Thank you so much for tuning in. Don't go anywhere, because Market Express takes the action forward.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, Friday cheer just about returned to the market. Nifty managed to shut shop in the green. Sensex also clawed back after giving up more than 150 points around noon. Most sectors ended the day in the green. Auto and telecom stocks inked gains. Select defense countries were also in good shape after the Modi government has unveiled India's biggest defense upgrade plan since independence. The Indian rupee slipped to a fresh low of around 88.36 against the US dollar on September 5 amid likely foreign selling and pressure from the US tariff actions. The currency is currently trading near its lowest level in recent months, weighed down by concerns over trade tensions and also capital outflows. Now, in the past week, the rupee has fluctuated between approximately 87.88 and also 88.32 against the US dollar. Now, analysts suggest that rupee may remain under pressure in the near term as markets await further clarity on the geopolitical and economic factors impacting the foreign exchange flows. Indian IT stocks saw a sharp decline and then a partial recovery during early trade today following an unconfirmed report that US President Donald Trump might impose tariffs on the IT sector. So the Nifty IT index dropped as much as 2.3%. Key Indian IT exporters such as Tata Consultancy Services, that is the TCS, Infosys, Wipro and HCL Tech, experienced share price declines due to concerns over the potential impact. So the US is a major market for these firms. However, Bloomberg later denied the report linking to Trump to any imminent tariffs on Indian IT companies, helping stabilize the market somewhat. Now, the earlier US tariffs imposed on Indian goods in August, including those targeting Russian oil imports, had already created trade tensions. Bluestone Jewelry and Lifestyle reported strong Q1 performance with key metrics showing robust growth. So the company listed on BSE and NSE on August 19 continues to strengthen its market position. Repeat revenue ratio hit of 50.7%, reflecting solid customer loyalty. Now, customer numbers surged by 34% and average order value also rose by 23%, signaling strong demand. Zydus Life Sciences subsidiary has inked an exclusive licensing and supply deal with Symphony BV of the Netherlands for ozanimod capsules, a generic version of Zeposia targeting the US market. Now, Symphony, one of the first filers, secured tentative FDA approval within 30 months, qualifying for a shared 180-day exclusivity period upon launch. So Zydus will handle commercialization while Symphony manages regulatory approvals and also the manufacturing. So the US market for ozanimod, used for multiple sclerosis and also ulcerative colitis, is worth $637 million, which is nearly 5,600 crore rupees. Yasho Industries has signed a 15-year supply agreement with a leading global multinational for lubricant additives set to generate 150 crore rupees in annual revenue from Q4 of FY27, equating to 23% of its FY25 top line of 673 crore rupees. So the Mumbai-based specialty chemicals firm will receive an advanced construct, a dedicated facility at its Pakhajan, Gujarat plant, with completion expected in 12 to 18 months. So pricing will follow a pre-agreed formula ensuring stable margins. Shares have jumped 4.7% to nearly 1,861 rupees with volumes up 30% to 4,870 shares. Yeah. Ola Electric shares dropped nearly 6% following Japan's SoftBank Group selling a 2.15% stake in the company between July 15 and also September 2nd. SoftBank's investment arm SVF2 Ostrich LLC offloaded about 94.9 million shares, reducing its holding from 17.8% to 15.6%. Despite the stake sale, Ola Electric has seen a strong rally in the recent weeks, driven by government incentives and also approval under the production-linked incentive scheme for its Gen 3 scooter range. So the company recently revised its battery cell manufacturing plans, targeting 5 gigawatt per hour capacity instead of earlier 20 gigawatt hour capacity goal by 2030. So shares have fallen around to 60 rupee, trading below the IPO price of 76 rupees. Vodafone Idea rallied 10% and also hit the upper circuit on heavy trading volumes, extending gains for the third day. The stock reached 7.27 rupees, driven by renewed investor interest, and also reports the government is seeking a strategic investor to infuse over $1 billion for a 12 to 13% stake. Now, this move aims to support the debt-ridden telecom giant struggling with nearly 83,400 crore rupees in AGR dues and also high annual payments. So the government and promoters may dilute stakes to stabilize the company. Vodafone Idea continues exploring non-bank funding sources to sustain capital expenditure and also network expansion. Shares of Brainbee Solutions, First Christ parent company, surged up to 14% to 403 rupees in trading after the government's GST Council cut taxes on key products. So the GST rate on personal baby care and beauty products was reduced from 18% to 5%. Baby napkins and clinical diapers from 12% to 5%, and toys from 12% to 5%. Stationery items like pencils and geometry boxes will face no GST. Now, this tax relief is expected to lower the prices and also boost consumption, aiding First Christ revenue. The company reported a 12% revenue rise in Q1, but also a margin contraction. PNC Infratech has emerged as the lowest bidder for a 495.5 crore contract from Bihar State Road Development Corporation to construct a high-level bridge and also approach road on Hathuri Atrar Bavangama Orai Road in Bihar, spanning 21.3 kilometers to be completed in 1,095 days. So the company also secured a 297 crore rupees of project from Airports Authority of India for developing Lal Bahadur Shastri International Airport in Varanasi, involving runway extension and also strengthening with an 18-month timeline, with an order book exceeding 17,000 crore rupees. As of Q1, PNC Infratech strengthens its infrastructure portfolio. Biocon shares rose 2% following the US Food and Drug Administration's recent inspection at Biocon Biologics drug substance facility in Bengaluru. So the FDA issued a Form 483 with 5 observations, all procedural in nature. Importantly, these observations do not relate to data integrity, systemic non-compliance or quality oversight. So the inspection covered manufacturing units, quality control labs, microbiology labs, and also warehouses. Biocon Biologics will submit a corrective and preventive action plan within the stipulated time frame and is confident in addressing the observations promptly. Sunteck Realty shares soared 12% intraday today, hitting 496.8 rupees on the NSE, driven by news of a 500 crore rupees of fundraise via preferential issue to fuel its expansion. Now, despite a 13% year-to-date drop and 24% decline over the past year, the stock reflects strong investor optimism. So Q1 of FY26 saw pre-sales rise 31% to 657 crore rupees and also collections up 3% to 351 crore rupees, with a net debt to equity ratio of 0.02 times and also 108 crore rupees of cash flow surplus. So a new Andheri redevelopment project adds 1100 crore rupees to its 40,000 crore GDV, with management targeting 50,000 crore rupees by FY26, expecting over 30% pre-sales growth and also improved collections. RPP Infra Projects has secured a 134 crore contract from the Maharashtra State Infrastructure Development Corporation for the improvement of the Mathiran-Neral Kalamb Road in Karjat, Raigad district. So the letter of acceptance was received on yesterday. The project to be completed within 12 months enhances the regional connectivity. RPP Infra's order book under execution stands at 2,762.89 crore rupees as of March 31. TD Power Systems reported strong Q1 of FY26 consolidated results with significant growth compared to the same period last year. Revenue rose 35.8% to 372 crore rupees from 274 crore rupees, and also EBITDA increased 42.2% to 68.8 crore rupees, with margins expanding to 18.5% from 17.7%. So net profit has jumped 41.7% to 50 crore rupees versus 35.3 crore rupees a year ago. So the order book stood at 1,468 crore rupees as of June 2025, with a book-to-bill ratio of 1.14 times. So order inflows grew 32% in the quarter to 392 crore rupees. The company also expects to revise its FY26 revenue guidance upwards. Maintain margins and also fulfillment of increased orders will be supported by a third manufacturing plant starting in FY26. Domestic business sees marginal growth potential boosted by hydro refurbishment tenders. Moschip Technologies shares surged 48% over 6 sessions, hitting a 52-week high of 279 rupees. So this is fueled by India's semiconductor ambitions showcase at Semicon India 2025. Prime Minister Narendra Modi's engagement with global chip CEOs and also the GST Council's rate cut from 28 to 18% on electronics has boosted the sentiment. So trading volumes have spiked, with 36.64 lakh shares worth 87.04 crore rupees exchange. Moschip, which is a key player in silicon and product engineering, benefits from the India Semiconductor Mission 2.0. India Resurgence Fund has made an open offer to acquire up to 3.85 crore equity shares, representing 26% of the expanded share capital of Sri Digvijay Cement Company. Now, this follows an agreement with the current promoter, True North Fund, to sell up to 50.1% stake to IRF entities. Upon the completion of the transaction, IRF will gain control of Sri Digvijay Cement, with True North stepping down as promoter and also being reclassified as a public shareholder. So the open offer price is set at 92.2 rupees per share, 92.2 rupees per share, slightly discounted to the last closing price. Bharti Airtel, promoter of Indus Towers, acquired 68.76 lakh shares between August 25 and also September 1, further solidifying its majority stake in India's largest telecom tower company. Now, this follows a share buyback that raised Airtel's holding to 50%, making Indus Towers a subsidiary. So today, Indus Towers shares rose 2.93% to 333.6, with the intraday high of 333.85 rupees and also low of 324.5 rupees. Trading volume surged 859.64% to 3,968. My bad. This is 39,68,898 shares against a 5-day average of 4,13,582. So the stock 24.69%, which is below its 52-week high of 442.95 rupees, and also 6.72% above its low of 312.6. And this also reflects a market cap of 88,009 crore rupees. So the purchase aligns with Airtel's strategy to strengthen its telecom infrastructure grip, also, which is amid robust 5G rollout demands. Prostam Info Systems has been awarded letter of award by Karnataka Power Transmission Corporation to establish a 150 megawatt is to 300 megawatt standalone battery energy storage system at the 400 kV Doni substation in Gadag district, Karnataka. So the project secured via tariff-based competitive bidding on a build-own-operative basis for 12 years offers a rental of 2.54 lakh per megawatt per month. So this is translating to 45.72 crore rupees annually. It also includes viability gap funding of 27 lakh per megawatt hour or 30% of the capital cost, whichever is lower. Indus Towers saw a block trade of approximately 1.2 million shares, with stock rising 2.34% to trade at 331.7 rupees. So the share price has fluctuated between an intraday high of 332.5 and a low of 324.5. with overall trading volume significantly higher than the 5-day average by 848.6%. So the stock is currently trading at 25.12%, which is below its 52-week high of 442.95, and also 6.1%, which is above its 52-week low of 312. So the market capitalization stands around 87,508 crore rupees. Recently, the company's approved expansion into African markets, including Nigeria, Uganda, and Zambia, which is aiming for revenue diversification despite some investor concerns. Tata Group-owned Indian Hotels Company, operator of Taj Vivanta and Ginger brands, reported a malware incident affecting select IT systems on September 4. So the company swiftly to contain the issue, notified that relevant authorities, and also have continued to monitor it closely with no impact on the business operations. So shares have risen 0.12% to 775 rupees, with low trading volume of 9,929 shares, which is compared to a 5-day average of 66,568. So the stock is down 13.28% from its 52-week high and above its low of 646.5. US President Donald Trump announced plans to impose a fairly substantial tariff on semiconductor imports from companies that do not move production to the United States. He emphasized that the companies investing in US manufacturing, such as Apple, would be exempt from these tariffs. So Trump's move aims to incentivize the domestic chip production, and amid a competitive race with China over advanced semiconductor technologies critical for AI development. So the exact tariff rate and timetable are yet to be disclosed, but his administration is pushing ahead with this trade measure to bolster US manufacturing and also reduce the reliance on imports. Gold prices are on track for their best week in 3 months as investors await the US jobs report scheduled today. Now, the market is focused on this data for clues on the Federal Reserve's next move on interest rates. Expectations of slower job growth and also a steady unemployment rate may increase the bets on a rate cut, which is supporting gold as a safe haven. So in addition, a softer US dollar is also boosting gold prices. The August jobs report is expected to show around 80,000 jobs added and unemployment steady at 4.2%. The Modi government has unveiled a 15-year multi-billion-dollar defense modernization plan, which is the largest since independence. The roadmap includes nuclear-powered warships, next-generation battle tanks, and also advanced AI-powered weapons. The army will induct 1,800 future tanks, 400 light mountain tanks, 50,000 tanks, mounted anti-tank missiles, and also 700 robotic counter IED systems. So the Navy plans 2 new aircraft carrier, 10 next-gen frigates, 7 corvettes, and 4 landing dock platforms with nuclear propulsion approved. So the Air Force will acquire 75 pseudo-satellites, 150 stealth bomber drones, precise munitions, and also over 100 remotely piloted aircraft. So the plan emphasizes AI, autonomy, and also space warfare for future readiness. The city is on high alert after a chilling WhatsApp message claimed 34 vehicles carrying human bombs and 400 kilograms of RDX are set to trigger blasts that could kill 1 crore people. So the threat received on the traffic police helpline from a group calling itself Lashkar-e-Jihadi comes ahead of the Ganesh festival's culmination. Mumbai police have tightened security across Maharashtra, though recent similar threats proved to be hoaxes. A viral video captured Maharashtra Deputy Chief Minister Ajit Pawar threatening IPS officer Bhagyashree Navtake in Pune today at 11 a.m., sparking a political uproar. During a road-widening project dispute, Pawar warned, "I will see how you stop the work," leading opposition parties to cry foul over power misuse. The BJP defends it as Pawar's normal tone, dismissing row as routine. So the incident amid public scrutiny has opposition planning protests, while the government calls it a heated exchange. Social media erupts with debates intensifying the pre-election tensions in the state as investigations loom. In a stunning development, Daniel Levy has stepped down as Tottenham Hotspur's executive chairman after nearly 25 years at the helm. Levy transformed Spurs into global powerhouse, overseeing the construction of the state-of-the-art Tottenham Hotspur Stadium and also securing a Europa League title last season. However, fan criticism over transfer policies and also 17th place Premier League finish last year marked his tenure. Lionel Messi was in tears last night as he played his final competitive match in Argentina, leading the team to a 3-0 World Cup qualifying win over Venezuela. Now, the 38-year-old scored twice, earning a standing ovation from 80,000 fans as the Estadio Monumental. Messi called it a dream to finish in front of his home crowd, but remained cryptic about the 2026 World Cup. So with Argentina already qualified, the football world awaits whether the legend will chase another title. London City Lionesses have shattered the women's world transfer record, signing French star Grace Gayoro from Paris Saint-Germain for a staggering £1.43 million. The 28-year-old midfielder with 100 caps for France joins the newly promoted WSL side as their 16th summer signing, reuniting with coach Jocelyn. Backed by owner Michelle Kang, this blockbuster move signals the Lionesses' ambition to compete with the WSL's elite Gayoro's debut and is also expected soon, though she may miss their opener against Arsenal. Well, with that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit and don't go anywhere.
Dreaming about me.
Love is to get lost in the look. Unlimit Love. B6 Pack 2 starts at 21.9 lakh. Mahindra Electric Origin SUVs.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future.
The Nifty and Sensex close flat after markets seesaw. Most sectors end higher, with Nifty Auto as the top gainer and IT loses the most. Mid and small cap indices outperform the benchmarks. Mumbai on high alert after a message threatening dozens of blasts in the city on the day of Ganesh Visarjan tomorrow. The message received by Mumbai police says human bombs have been planted in 34 vehicles. Experts weigh in on the GST overhaul. Bajaj FinServ's Sanjeev Bajaj calls it the most prominent GST reform since its formation, while Inam Holdings Sridhar Shivraman believes it will boost consumption. The government unveils India's 15-year defence roadmap with a plan to induct nuclear-powered naval warships, long-range hypersonic missiles, 150 stealth bomber jets and more. Swiggy, Zomato are planning to cut delivery partners' payouts to offset the likely GST outgo of 200 crore rupees. Sources say food delivery platforms are not keen on passing on the impact to consumers after the recent round of platform fees hike. Bank of Baroda classifies Anil Ambani and Reliance Communications loan accounts as fraud. Company says these loans are from before, as the company was admitted into insolvency and will be resolved either through a resolution plan or liquidation. The Karnataka cabinet will withdraw 60 cases against various activists, political workers and the general public. 11 are related to protests held after the state CM DK Shivakumar was arrested in 2019. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's take a look at how the markets fared today. There was Friday cheer on the street, Nifty managing to shut shop in the green and the Sensex also clawing back after giving up more than 150 points around midday. All sectoral indices barring IT gained this week, with metal leading the way. Auto also fueled a fair amount of gains, ending over 5% in the week. My colleague Harsh Saita joining in with a wrap-up of all the market action for the day and for the week.
Well, the Nifty is closed absolutely flat for the day. We've closed 24,700 plus, so we've held that level at least at close, even though we slipped briefly below that as well. So we saw a bit of a recovery from that low of the day. But surely the strength of the morning was given away for a better part of the day, and thereafter we saw a bit of a recovery. Now let's talk also about the breadth on the Nifty, and that was largely tilted in favor of the gainers, and we had around 27 gainers to 23 losers on the Nifty. The gainers largely dominated by the auto sector. 3 out of the top 4 gainers were from the Nifty auto pack, and the fourth one was Shriram Finance, which is also largely a play on auto, and therefore all of those largely, I would say, linked to auto. What didn't do well were some of the IT names, and those dominated the bottom of the screen, along with maybe an ITC, which was the top loser on the Nifty 50. So broadly, that's how it played out. The one big boy, Reliance, did fairly well for itself, 1.2% higher in trade, and that, despite that, in fact, if I can call it, the Nifty closed just about flat. So that was the texture. Let me now talk about sectors as well. The metals outside of auto was the other sector which did relatively well. In terms of the losers, you had quite a few. You had Realty, the Nifty Realty was one of the losers, and you saw some bit of pressure in broader markets where some of those names were concerned. The Nifty Bank and the Nifty PSU Bank. The Nifty PSU Bank closed around 0.25% higher, so some bit of outperformance there. But the Nifty Bank absolutely flat again. The Nifty IT was obviously one of the top losers in trade today. So that's broadly how sectors also played out. Auto, of course, was the top sectoral gainer. Now let me talk a little bit about the week as well. And for the week, the Nifty 50 index didn't do much. The Nifty mid-cap and small-cap indices did much better. So we saw both of those indices relatively outperform the Nifty by quite a bit. In fact, the Nifty small-cap index has gained 2% for the week. So it's had a fairly good week, if I can call it that. So the broader markets obviously dominating versus the Nifty 50 for the week gone by.
Thanks, Harsh, for that. Meanwhile, we also had a conversation earlier with Navneet Munot, who's the MD and CEO of the HDFC AMC. He said that India has now become Atmanirbhar when it comes to capital markets and that India is becoming a nation of investors. Let's listen in.
I think we have to look at in the context of the GDP that we have, the savings that we have. India has been a nation of savers for generations. What we are doing now is becoming a nation of investors. And I think this is very good for the economy. In a way, we can say that with pride that we have become Atmanirbhar when it comes to capital market. Now, I won't say that we don't need foreign savings. I think our investment needs are humongous. Humongous. We need more foreign flows for sure. And at some stage, it's likely to come both in the form of FDI as well as in the form of FPI. Now, I give you one data point. If I look at United States, there would be $50 trillion of institutional money which can potentially look at India as an asset class.
Okay.
Think about 1% switch. What amount that is? $500 billion. Now, to put that number in context, we have hardly got any money in the last 5 years. But the potential for us to convert 1% of their investment assets today is $500 billion. That's $500 billion. That's why I've been harping on the point that what we need to do as an economy is to increase the absorption capacity of the capital.
And trouble mounts for Anil Ambani as the Bank of Baroda has flagged loan accounts of Reliance Communications and its former promoter as fraud under RBI's latest guidelines. Anil Ambani's spokesperson, however, says he was not involved in RCom's operations or decisions and that the issue dates back to 2013. My colleague Vishwanath joining us with more details.
What we do know that has happened last evening is basically, as far as Bank of Baroda is concerned, they have gone ahead and classified Reliance Communications as well as Anil Ambani as fraud accounts. Now, that's, of course, the news that has happened last evening. This is following what State Bank of India as well as Bank of India both did. State Bank of India back in June and then Bank of India last month. They both classified Anil Ambani as well as RCom as fraudulent accounts. Ambani's, of course, gone ahead and denied all allegations by all the lenders. He is currently taking some legal advice from potential lawyers to see how he can counter this. As far as Reliance Communications is concerned, the company was admitted to insolvency back in 2019. Since then, of course, a lot has happened. We'll give you a fair idea of what exactly is owed by Reliance Communications to its lenders. If you look at where the Indian lenders are, Indian banks and NBFCs are owed close to 21,000 odd crore under the insolvency proceedings. Within this, LIC's claim of about 4,758 crore, that's the largest claim as far as the lenders are concerned. Chinese lenders too have claims against the company. There are a bunch of international lenders as well, like for example, Barclays, SC Louis and HSBC France. All of these have exposures to Reliance Communications under the insolvency proceedings. The total financial creditors, 21,000 crore was Indian. Total financial creditors is about 40,000 odd crore, which Reliance Communications is liable to repay to the banks. Now, let's take a look at where the top 5 Indian bank exposures are. State Bank of India is 3,628 crore. That's a very large exposure that they have. Bank of Baroda, which of course came in last evening with that fraud classification, 2,200 odd crore. You've got Union Bank of India with about 1,300 crore, Bank of India 990. Other banks include Canara Bank with about a 906 odd crore. Canara Bank, remember, had tried to classify the account as a fraud, but since then has not proceeded with that because there was a Supreme Court order that prohibited immediate classification without hearing the borrower's side. Now, what does this mean for the banks, for the borrower, for the broader investigating agencies? According to RBI's 2024 guidelines, banks are required to lodge a complaint with the CBI if the total amount due is over 6 crore. So in this case, of course, they will have to lodge that complaint with the Central Bureau of Investigations. Separately, the borrowers who are linked, either the borrowers or those linked to the borrower companies, they will all have to face penal measures because that is what the fraud requirement is. These penal measures include that borrowers as well as the linked persons will not be able to borrow any bank loans for 5 years after repaying the defrauded amount. So that's an important distinction to make here. And because our RCom is an insolvent company, so special cases apply. In case of the IBC cases, banks have the discretion to lend further to the company, depending on who buys that company under insolvency. But the penal measures will continue against the ex-promoters, managers, as well as directors of those companies, even after insolvency. So that's where the current situation lies as far as RCom as well as Anil Ambani are concerned. We need to see whether there is a legal opposition by Anil Ambani, whether more banks join the course. That's something that we'll watch out for on NDTV Profit.
Right, Vishwanath, thanks so much for that. And moving on to GST, Sanjeev Bajaj, Chairman and Managing Director of Bajaj Finserv, has welcomed the recent GST reforms, calling them one of the most prominent changes to the framework since its inception and a move that could significantly boost the economy. Meanwhile, Sridhar Sivaram, Investment Director at Enam Holdings, believes a reduction in GST rates could have a more meaningful impact over the longer term. Jasbir Singh Gujral of Syrma SGS believes GST rate cut-led rise in demand is very much on the cards. He also laid out the impact that he's penciling in and the timeline for this uptick. Let's listen in.
The reality is that this is probably the most significant reform that we have seen since the introduction of GST in 2017. And this directly benefits multiple sectors. It benefits households because their costs come down dramatically, whether it is for daily household items, whether it's for travel, whether it's for your policies, insurance policies for life or for health. It benefits MSMEs. See, so many sectors that are labor intensive have seen a reduction in cuts over there. The cut in cement, this will enable the construction infrastructure sector. So really it's been a sweeping rate cut across most sectors, correction of inverted duty structure, and again, many areas. So all this clearly should provide a boost for the economy.
We've been saying earlier that a direct tax cut benefits only 2 to 3% of the population, whereas any change in the indirect tax benefits 140 crore people and has a far-reaching impact. So I'm happy to see what has happened on the GST side, because this will have a much greater impact, but over time. So I think the problem is market often expects everything to happen the next day. That may not happen. We have a lot of other issues, on the geopolitical side or on the macro side. But if you ask me from the government side and RBI, they've done so much. There's only that much they can do. The rest is up to the corporates and the earnings and all the other factors to play out.
GST cuts are nothing short of radical reforms in the terms of putting money in the pocket of a common man. Now, as far as Syrma SGS is concerned, we are primarily into auto, something in consumer durables, and in all those cases, whether it's auto, agricultural, tractors, everything, the GST has been cut drastically by 10%. Now, when that sort of money comes into the pocket of a common man, the guys who are at the sort of lower end of the pyramid, I think it's going to be having a multiplier effect on the demand. And I think let's give us some time, 30, 40, 50 days. I think the demand will kick in very fast and it will be a steep increase in demand.
And we've got some breaking news coming in. US President Donald Trump has written on Truth Social saying, looks like we've lost India and Russia to the deepest, darkest China. May they have a long and prosperous future together. Let's remember, Donald Trump, the US president, has been fairly silent as we have seen Russia, China and India come together during the SCO summit. But now Donald Trump taking to Truth Social and writing, saying, looks like we've lost India and Russia to deepest, darkest China, and may they have a long and prosperous future together. Let's remember these comments coming in as the US has in fact remained silent for a fair amount of time, right after we have seen things sour between India and the US after the imposition of the 50% tariff. Post that, we've also seen India actually hold strategic meetings with China, whether it is in the form of, some kind of collaboration taking place with the resumption of flights, the coming together at the SCO summit, the very crucial meeting taking place between the Prime Minister, between Vladimir Putin and, of course, Xi Jinping. We're also seeing the Chinese delegate that, in fact, came to India, held a meeting, and looking at resumption of dialogue between what was once a tense relationship between India and China. But now Donald Trump breaking his silence after making, some comments that he had through the week, now breaking that silence and taking to Truth Social and saying that looks like we've lost India and Russia to the deepest, darkest China. But let's cut across quickly to a briefing taking place by the Ministry of External Affairs.
And obviously we reject them. As far as India United States relations are concerned, प्रणय, ये हम लोगों ने पहले भी कहा है कि दोनों देशों के बीच में एक कॉम्प्रिहेंसिव ग्लोबल स्ट्रेटेजिक पार्टनरशिप है और हम चाहते हैं कि इस पार्टनरशिप को जो मुद्दे तैयार किए गए हमारे बीच में एक सब्सटेंटिव एजेंडा जिसको बनाया गया है उस पर काम करके हम इसको आगे ले जाएं दोनों देशों के बीच में एक आपसी समझ के साथ दोनों के शेयर्ड इंटरेस्ट के साथ और साथ ही साथ म्यूचुअल रिस्पेक्ट के साथ sorry we have also spoken about it earlier also. This relationship between United States and India is very important for us. Both our countries, we share a comprehensive global strategic partnership which is anchored in our shared interests, democratic values and robust people-to-people ties. This partnership has weathered several transitions, as I said before, and challenges. We remain focused on the substantive agenda that our two countries have committed to, and we hope that the relationship will continue to move forward based on mutual respect and shared interests. As you would have seen, प्रणय, आपका मैं ध्यान लाना चाहूँगा, युद्धाभ्यास चल रहा है अलास्का में, साथ ही साथ कुछ दिन पहले 2+2 का इंटरसेशनल मीटिंग हुआ था, एक और डेलीगेशन एक दल आया था डिफेंस पॉलिसी ग्रुप का अभी कुछ दिन पहले, तो दोनों देशों के बीच में आवाजाही, दोनों देशों के बीच में बातचीत चल रही है और हम प्रतिबद्ध हैं कि इस साझेदारी को और मजबूत करें. Yashi, your question regarding the statements that were made by Nepal on the border issue. On 20th August, if I recollect correctly, we had issued a statement clearly stating what our position is, and I would therefore like to draw your attention to a statement. Can we move forward? Shivam?
Thank you, sir. This is Shivam Patel from Reuters News. I had a query about the SEO summit in Tianjin. In the joint statement, there's a mention that interested parties agreed to establish an SEO development bank. Is India one of the interested parties? Could you also shed some light on the mandate of this bank? And is the ultimate goal the creation of an independent financial system? Thank you.
Yeshi?
This is Yeshi Seli from Business India. Commerce Minister Piyush Goyal just 2 days back had said that the bilateral trade agreement is likely to happen and negotiations are going on. In that context, given that background, President Trump's statement, is that going to be a spanner in the works? And secondly, are we going to be optimistic of having a Quad summit this year? And can I have if you permit, can I ask another question? A lot of countries are reaching out to India to intervene end the conflict in Ukraine. Is there something that India is going to do, considering the fact that we are close to Russia as well?
उमाशंकर सिंह, इंडिपेंडेंट जर्नलिस्ट। मेरा सवाल ये है कि कल ईयू की तरफ से 2 बयान आए जिसमें ये कहा गया कि भारत का रोल काफ़ी अहम है यूक्रेन रूस कॉन्फ्लिक्ट को ख़त्म करने के लिए। मेरा सवाल ये है कि क्या भारत कोई एक्टिव रोल प्ले कर रहा है? बयान तो भारत की तरफ से लगातार आ रहे हैं कि युद्ध का काल नहीं है और डायलॉग और डिप्लोमेसी के जरिए मामले को सुलझाने की ज़रूरत है, लेकिन क्या पर्दे के पीछे कोई एक्टिव रोल भारत की तरफ से निभाया जा रहा है? अजय।
So good afternoon, Ajay Banerjee from the Tribune this side. Though you have answered what Donald Trump has said, you have answered to that, I'm not on that. But Trump has mentioned that India has been lost to China. Are you comfortable with this clubbing with China?
Okay. Sandra.
Could you perhaps, this time I won't forget to introduce myself. I'm Sandra Petersmann from DW Germany. Could you perhaps shed some light on the proposed BRICS virtual summit on Monday that President Lula of Brazil called for?
Okay.
Will it happen and will PM Modi participate?
Okay. So first, Shivam, on your question regarding SCO Development Bank, which has a mention in the joint statement, in the Tianjin Declaration. At this point in time, or at this stage, we are examining the proposal. Further, in relation to your other part of the question, we don't have any details to share at this point. We've said this before as well. We continue to remain engaged with the US side on trade issues. On Quad Summit,
MEA spokesperson, these comments coming in as the MEA has in fact responded to Navarro's comment on India. Also, these comments coming in at a time after US President Donald Trump has written on Truth Social saying, looks like we've lost India and Russia to deepest, darkest China. May they have a long and prosperous future together. Donald Trump's Truth Social post lamenting that the US has lost India reflects the US's concerns over recent optics of closer ties among India, Russia and China, especially after their show of unity at the Shanghai Cooperation Organization Summit in Tianjin that we saw earlier this week. But let me quickly get in some analysis from David Roche, Strategist Quantum Strategy, joining me. David, good evening from NDTV Profit, and thank you so much for your time. How are you interpreting Donald Trump's statement? Is this geopolitical realignment and as decisive as Trump suggests, or is it mainly tactical posturing is what we're seeing?
Well, you never know with Trump. You know, what he says today is not what he thinks tomorrow, if he ever thinks. But I mean, if Trump has lost India to darkest China, then he was the one who did it. So with his punitive tariffs on India, which then, in a sense, galvanized the whole of the global South, whether you talk about SCO or whether you talk about the BRICS. And they actually got galvanized and got energetic about creating some economic and political substance to the previous narrative, which was really an association of states which didn't have a lot in common, and now they're looking for ways to have more in common. So I think it is a very real realignment of India and many other countries which realize that American power under Trump is declining, and that it is the sort of power which has been exercised in a manner which is hostile to their interests. So you shouldn't be surprised that there you have a global realignment. But the global realignment is there for keeps. The question is, can they really make it economically stick? Can they make the trade they do between themselves, for example, more important and bigger than what they do with the US? These are the sort of questions which remain unresolved. But the direction is absolutely clear.
So what is India's engagement then with China and Russia at this SCO summit signal for global financial markets and even currency trends? Let's remember Trump's comments, and he has been silent, I'd like to say, which is a little out of character for him, especially with China and Russia, particularly pushing de-dollarization at this point of time.
Well, I'm not sure that Trump understands the mechanization, the mechanisms of de-dollarization, but obviously what he can understand is that if there is more trade and economic interfaces between China and the Global South, and between India and the Global South and China, then clearly they're not going to want to use the US dollar. Why would you actually turn away from the US in terms of trade and turn to the US in terms of using its currency for all purposes? So he understands that threat. What he does not understand is that one of the reasons this is happening, one of the reasons why people want to get rid of the US dollar is because they see the US as being a less reliable place to keep the money. And the reason they see it as a less reliable place to keep their money is because all sorts of measures by the US go against their interest. And of course, they're being threatened by the kind of economists that Trump employs with taxing foreign holdings of dollars, with penalizing foreigners who hold the dollar and push the dollar up in, according to Trump's credo, to uncommercial, uncompetitive levels. Now, he wouldn't understand the mechanism that if you address one issue, which is solve the US current account deficits and get a lot of tax money from places like India to fund your budget deficits, then at the same time, what you're doing is you're damaging the willingness, the motivation for other countries to hold the US dollar, and therefore automatically you are making the US dollar less of a global reserve currency, less of a transaction currency. I don't think he understands the complexity of what he's doing, but I'll tell you where he's going. He is going to make the dollar a less, not an unimportant currency in international trade and reserves. He's going to make it less important, and that means the dollar will go down.
All right. And, before I let you go, David, if, in your view, how should multinational investors adjust their portfolio if we're looking at India, we're looking at Russia and China, increasingly synchronizing policy at this point of time, a risk scenario that you've actually cited for market instability for the rest of the year?
Well, I would say that the effect of most of the things I'm talking about are long-term. It will take a long time in order to cement the BRICS into something which is not just geopolitically significant, but economically significant and coherent. So it will take time. But if you look out 10 or 15 years, when I will not be there, so you won't be able to tell me that I was wrong, you will see that people will reallocate an increasing portion of their portfolio to places like China, to India, to Brazil, and the Global South in general. That will be the general trend. And the question is, what is the currency which this is going to be in? And I would suspect that it will probably be the renminbi, with the euro playing quite a subsidiary role, an important subsidiary role, because it is managed on a decent basis.
Right. David Roche, thank you so much for that. Donald Trump finally breaking, whether we can call it silence, is something that remains to be seen. But these comments coming in as the SCO summit concluded, which was a pivotal backdrop for Trump's comments, as we saw the Prime Minister, Vladimir Putin, and Xi Jinping seen together showcasing diplomatic warmth and strategic engagement, and all of the other key outcomes that we saw, and Donald Trump's comments coming in light of that. We'll continue tracking the story and bring you the latest developments, but for now, it's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold.
Hello and welcome. You're watching KYC, and of course, we are now starting to understand and assess how GST is impacting consumption, and at the forefront of that is ACs, fans, air coolers and the like, and Symphony therefore comes to the fore, and therefore the first question I'd want to really understand from someone like a Symphony is that how elastic is demand? Would demand go up significantly if the GST is to come down, which it will on the 22nd of September, and therefore what should we pencil in? The essential question is how much will volumes go up by given this GST rate cut that has come through. So that's going to be maybe my first couple of questions. The third question is going to be around weather patterns, and the weather has impacted volumes in Q1, but likely there's going to be a catch-up play in the second half of this year. As the monsoons recede, hopefully in September, can we start to see a strong sales growth come October as the heat before the winter kicks in, and whether we can fully catch up with the kind of sales loss we've made in Q1. That's what I'd want to understand, whether we can reverse that. A double-digit growth is what they've penciled in on a very, very strong base of FY25. Wanting to see whether there's a positive bias to that commentary coming through. In terms of the third piece, it's outlook on foreign markets and new categories. Now, you've seen a bit of a leg up that the numbers got in FY25 because of China and the Chinese subsidiary turning positive. Can that kind of trend continue? Can the losses from foreign subsidiaries or the lower profitable subsidiaries, can they start to reverse and aid the numbers overall, especially where foreign markets is concerned? And can new categories continue to drive up growth and allow Symphony the scale it needs to expand margins? And of course, we've already seen a very large margin expansion. Can that continue? Do they plan to divest from any of the markets? This has been a recurring question, given that Symphony does ever so well in India, but not so well in some of the foreign markets. So is there a plan there? And last question that I'd want to ask is, what is the margin outlook? And we spoke about that, and we'll obviously look at the numbers as well. And when we do, you'll get a better perspective as to what I'm talking about where margins is concerned. We've seen quite a bit of change where the margins is concerned, FY24 versus FY25. Now let's talk a little bit about Symphony itself, what it does. and give you that overview with regard to what it does. It's a leading branded air cooling solutions provider. It, in terms of products, I will get to it, but it exports to 60 plus countries. The core is eco-friendly, energy efficient air coolers for residential, commercial as well as industrial. It's expanding into all weather, adjacent small appliances like fans as well as water heaters. That's the other key category they are entering, but currently smaller in comparison to the larger pie that they are focusing on, which is air coolers. The last piece is, it's an asset-light business, has a dominant position in India, and it has a pivoting international strategy. Now, let me focus on this for just a little bit more before I go to products. If we can roll back the slide, there you go. So, one asset-light business, it doesn't have a manufacturing facility. It has third-party manufacturers which manufacture for it, and it sells. It's a 6,500 crore market cap company, and it does nearly 1,500 crore plus of sales. And that kind of underlines to you that the asset-light strategy is what they use for this purpose. And therefore, can they continue to deliver on that strategy is the core question. It's dominant in India, but it's pivoting its international strategy. Are they doing that in a significant fashion? What's the impact of that going to be is what I'd also want to know. So a little bit about that. Now let me talk about products, and you'll get a decent sense of what they do therefore. Air coolers, which is the primary product. There are multiple models for different price points, and some of that, the fact that they've come in with new models has aided the numbers for FY25 as well. So air coolers, of course, is its core product offering. The other one is, of course, commercial cooling as well, large space cooling for factories. They also do tower fans, kitchen cooling fans. They also do water heaters, and they've launched a couple of new ones as well this year. And this is, of course, the upcoming segment that they have. So you might well see this as something of a renewed focus area and a larger mix coming through in terms of some of these new and alternate products that they're doing. Then there is spares and accessories, which is replacements for the current products that they have. So broadly, that's how Symphony shapes up, both in terms of business model and products. Now let's talk about all of the key metrics, and we'll start off with the income statement, of course, the balance sheet, thereafter cash flow, return ratios, shareholding patterns, street cred, street coverage, and valuations. We'll cap it off with those 8 metrics. And let me not delay this further. Let me talk about the income statement right off the bat. If you see the last around 3 to 4 years approaching FY24, you saw nearly no growth there. You saw some bit of margin expansion, but no material growth. So the entire 15% CAGR that you're seeing on a 3-year basis, pretty much all of it is back-ended, which is between FY24 and FY25. But nonetheless, it's still a 15% growth. That's what you essentially look at. And what you also therefore see is whether margins are expanding, and they have. FY22 was a good margin year, after which margins fell, and now they fully recovered. They were 15% in FY24 and currently sit at a very healthy 20%. So that's the broad way in which margins have moved. Net profit also has shown decent growth. FY22 to FY23 was a tough year of sorts. Thereafter, we've seen a renewed pickup in the profitability, which has gone from 122 crores in FY22 to 213 crore in FY25, with a real bump up that we've seen in FY24, post FY24, all the way through FY25. So that's where some positive momentum has been built up. I also want to try and highlight that the Q1 FY26 numbers weren't exactly the best, and that's understandable. We've still given this a thumbs up. In fact, there was 400 crore of sales in the Q1 FY25 quarter, and the sales in Q1 FY26 was just 250 crore. So we've seen a shrink with regard to sales. Margins as a result as well have come off sharply when you're looking at the Q1 numbers in particular. So you want to keep your eye out on that one. You want to see whether there is a recovery at play. Mind you, Q1 was a quarter where for the AC market in India, it was a tough quarter because monsoons came in early, if you remember. And weather-related factors have impacted sales in Q1 FY26. But could you start to see a reversal, or is it loss of sales? That's something that I'd want to somewhere take a feeler from the management as to whether they'll expect that revival regardless of GST. And of course, the GST will probably spur it further, because that will aid both margins and profitability to come in sharply higher if that were to come through. So something you want to keep your eye out on. Now let me take it to the balance sheet, and the balance sheet is an interesting one. Generally, when we look at the book value, it goes up. Here, you're seeing the book value go down, and that's because there's a 270 odd crore buyback which they've done cumulatively over the last couple of years since FY23. So since this point, they've done around 270 crore of buyback, and therefore what you're seeing is some amount being shaved off the book value, because you start to see reserves, etc. being adjusted for that. So broadly, that's how it's played out, and which is why you're seeing it go down. But otherwise, if you look at the borrowing, it's a very small number for a 6,500 crore company, and the book value is at around 760 crore odd for a 6,000 crore market cap company. That's broadly the take. Decent amount of cash also sitting in the books, so no concerns here per se. We've given this a thumbs up as well. Now you look at cash flow, and cash flow will give you a picture with regard to cash flow from operations to EBITDA, and that is quite decent. It's 80% plus. There is some receivables where amounts are locked, but outside of that, there's no concern per se, and therefore we've given cash flow also a very healthy thumbs up. There's been no problem whatsoever. Now the jump you saw in profitability in FY25 will reflect on the return ratios. Let's pull that one up, and that's what you'll see, that extremely sharp jump, and there you go. That's the ROC. But outside of that, if you look at the ROC numbers, it's been largely range bound. So decent kind of ROC shape that we've seen. Of course, FY25 is that year in which we've seen an anomaly, and FY26 we've seen in Q1 that pressure come through with regard to ROC as well, because of pressure on margins and profitability. So likely you'll see a shrink on this. How much, whether they can maintain 20% plus will really be the question. So, but we've given this a thumbs up, of course, given the stability of it and the possibility that you could well see it shrink is something that you want to keep your eye out on. Now let me talk about shareholding. You're looking at 73% promoter ownership here, which is more than decent. You've got FI is also owning a bit of it. DI is also owning around 9 odd %, and then you have public holding the rest. So broadly, it looks like a good structure in terms of shareholding pattern as well. No concerns here. In terms of trades and block and bulk deals, not too many insider trades either to talk about, any material ones at least. So so that's something that's not much of a concern. Now let me talk about some of the other metrics. Let's talk about street cred, and when you look at the 1 month performance, when you look at the 6 month performance, the 12-month performance, you've seen clear and constant pressure on the stock price. So that's how the stock has done in terms of performance. Clearly there's pressure, 40% down from the last year, and only a 12% return is what it's given over the last 5 years. So we've given street cred a thumbs down, given that this has been a stock which has performed preciously little over the last 5 years, and there's clearly been pressure on the counter. So that's how we've shaped up street cred. Now let's talk about valuations, and when we stack up the valuations, you're looking at Symphony at nearly 32 times. When you're looking at Voltas, Blue Star, all above 70 times. So that's something you want to think of. There's also Crompton and Whirlpool, because they are diversifying into that segment, and Therefore, Symphony stands out in terms of valuations in comparison to all of these. So there's a thumbs up there with regard to where valuations is concerned that Symphony commands. But of course, there's a larger tilt towards AC, and that's something you want to keep your eye out on. Street coverage, 7 buy, 1 hold, 1 sell. Firstly, the coverage is just 9, so we've tried to be a little more tempered here, but a 37% is the average upside. And therefore, ideally a thumbs up, but we've just been a little more cautious here and given this a neutral, thereby arriving, and let's stack it all up, at a rating of 6.5, very healthy on our KYC rating, with a thumbs down on street cred. But outside of that, when you're looking at the metrics, well, it's a very solid set of metrics that we've tracked. Very, very few companies where we've seen this kind of a set of numbers, all of them come together very, very well. So 6.5 on 8 on our KYC final rating for a Symphony, and broadly that's how we sum it up. Now let's talk a little bit also before. Okay, so we have with us Nrupesh Shah, who's the Managing Director, Corporate Affairs at Symphony, joining us. Great having you here, Mr. Shah. Good morning. This is Harsh here. Let me first start off by understanding what is your sense with regard to the elasticity of demand for the products you sell. You believe that this GST rate cut is going to really aid the numbers in a very solid fashion for you, and how much of additional growth are you already penciling in for the current year, if that is so?
Thanks for having me. First and foremost, let me clarify. As far as air coolers are concerned, there is no reduction in GST rate.
Right.
Earlier it was 18% and it remains intact at 18%.
Right.
So all the cooling appliances now, whether fan, air cooler and air conditioner, are in 18% category.
Correct.
So as far as GST is concerned, it's a neutral for Symphony and air cooler industry as a whole. That's number one. Number two, however, that doesn't change anything in terms of the outlook, in terms of the growth potential. By the way, I was just listening to your very impressive commentary, but just to add some more flavor, in last 3 years, as far as Symphony domestic sales is concerned, it has registered CAGR annual growth of 23%. That is as far as the domestic household air coolers and other products put together. Again, having said that, as June 25 summer was not quite conducive for entire cooling industry, there has been a degrowth, but still June 25 summer quarter registered second highest June quarter sales in the history of the company. What I mean by it was better than earlier best of the base season. And the reason being, one, wide variety and range of product and air cooler category. Secondly, deep penetration, what we have done in last couple of years in semi-urban and rural, and especially alternate channels including e-commerce, D2C, apart from large format stores. And in addition to that, in financial year 25, 21% of the top line and almost similar bottom line was contributed by non-household air cooler sale in domestic market. What I mean by 21% sale was contributed by products like large space ventilated air cooling, that is centralized air cooling, water heater, tabletop fan, kitchen fan, and exports from India. And by the way, in June 25 quarter, that was 30%. Few years before, this percentage was minuscule, and they are having huge, immense growth opportunity.
Understood. So let me clarify this. GST rates have been brought down across the board, which gives the people more spending power. Do you believe that is going to drive top line growth for you in a better fashion this year, in a year in which Q1 in any case was subdued. So give us that perspective, sir. That's where I'm coming from.
Yeah. So one, on account of GST rate reduction, and secondly, earlier on account of income tax rationalization. I think the overall estimate is close to 2 trillion rupees will be saved by the customers or the end or the taxpayers. And good amount out of that has to come back to the consumption. And certainly that should be a huge boost for an industry like us. Not only that, as of now, or even as on 38 June, across consumer durable, whether you name it refrigerator, washing machine, air conditioner, air cooler, there has been huge inventory pile up at a trade level. In fact, this will also help to substantially uptick the festive sale. And on account of that, it should also substantially help to us as well as other companies.
Got it. Got it. Okay. So that should certainly aid the numbers. What are you penciling in, sir, in terms of FY26? What's the top line growth looking like for you?
As per our IR policy, we are not allowed to share any forward-looking statement. But considering normally summer sets the tone for the whole accounting year, and hence obviously current quarter and next quarter is likely to be subdued. But as I explained, non-household air coolers and exports from India to an extent has a potential and likely to make up to some extent that shortfall.
Understood. Sir, with regard to export, and we speak about this even from a perspective that FY25 was a bit of a turnaround year for you where exports is concerned, or where your foreign markets is concerned, if I can call it that. Do you expect that to sustain, and this real sharp expansion in margin that we saw in FY25? Of course, Q1 has already been a very soft quarter. So give us context on where should margins therefore lie for the full year?
Yeah. So first question related to exports.
Yes, please.
Certainly, I think a lot of work has been done by the company in last couple of years, and we are witnessing the result of that. And hence, we are very optimistic about the exports from India. And hence, in line with that strategy, focus on India and exports from India, we have decided to put on block our two overseas subsidiary companies, one based in Australia and second in Mexico. It doesn't mean we are necessarily exiting from those markets, but it makes a lot of sense to produce and export from India with the local team. So that's number one. Number two, as far as exports are concerned, vis-a-vis international players, mainly Chinese players, Symphony's products are far, far superior and still really value for the money, and we really give a run for money to the Chinese players in terms of the product, in terms of the pricing, and still commanding a decent margin. And as far as the margin for the year or down the line is concerned, certainly our contribution margin or gross profit margin will remain intact as we witnessed last year. However, when it comes to the EBITDA margin or PAT, it is also the function of the economies of scale and top line, because beyond certain level, fixed overheads as well as advertisement, sales, promotions don't necessarily go up. So it's also partly a function of that. So in the medium to long term, if we register very healthy growth, there is a possibility to improve the margin.
Got it.
At EBITDA level.
Yes. Point taken. So your valuations look compelling versus peers, and therefore give us some flavor as to how investors should think of your business. Let me step back and maybe think of this from a 3-year to a 5-year perspective. I know you don't give a guidance per se, but what is the aspiration? Can you grow, given that the market can grow, and because there is such a large demand which India can cater to, can a 10 to 15% growth be something that one can pencil in on a CAGR basis over the next 3 to 5 years? Is that something that you would aspire for?
So as far as market is concerned or channel is concerned, whether aspiration or forward-looking statement, they are one and the same, other than one is a fine terminology. Nevertheless, of course, internally in the organization, we do have short-term, medium-term, as well as long-term business plan with scenario A, scenario B, as well as scenario C. And obviously, we have very ambitious aspiration in terms of the growth, performance and profitability. And as I mentioned earlier, and as you were also sharing with the viewers, as far as domestic household air coolers are concerned, in last 3 years, there has been 23% CAGR growth, and on a console basis, we have registered 15% CAGR growth. So that is the kind of the potential, and in addition to that, the kind of new models we have launched, new range which we have launched, and some other new categories which we are emphasizing. I think it seems a very bright future.
Right. Point taken, Mr. Shah. I understand where you come from. Let me also try and get a lens. You've spoken about a couple of subsidiaries being completely divested, Australia, Mexico in particular. Where does that therefore leave you where profitability and margins on a steady state basis in a regular year is concerned? What is the thought process there? Because, of course, FY26 looks like a year in which it's going to be difficult for you to clock the kind of margins that you've set for yourself in FY25. So FY26 is going to be a tough year, but at a steady state, what is the expectation?
So as far as Symphony India is concerned, I think in the medium to long term, we aspire to maintain the margin what we achieved in FY25. That's number one. As far as our console financials are concerned, I think our margin should improve. The reason being our Australian subsidiary and Mexico put together, they are dragging down the margin, as well as they are also blocking, especially Australia, the capital. So in fact, we will be in a position to improve top line as well as profitability after divestment.
Perfect. Thank you so much, Mr. Shah, for coming in and speaking with us. This has indeed been fun speaking, and you know, great insights all around as to what to expect overall from the segment as well as from Symphony. Thanks so much for coming in and speaking with us. But that's all the time we have, viewers, with you as well on this edition of KYC. But stay with us. More action on the other side. Thanks for staying with us, and more action on the other side. So continue to stay tuned to NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the four force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside board.
From an investment perspective, it's very hard to argue in favor of buying a house.
If you aim to buy a property, it is not going to be less than a crore for sure. The property registration numbers are going up. So there is clearly somebody buying.
Yeah, people have to take 15, 20-year loans. It's not like they can afford, especially in places like Mumbai.
If you can afford, you will find maximum number of people wanting to buy. It is, of course, one of the factors that it is an intergenerational asset, but does not necessarily mean that you should not own one for your own self.
Sure.
Now, when we're talking about buying, I'm not necessarily saying that you buy a property in which you really want to live. There are few things that you have to look beyond calculations. I would not be able to take a shower any day because I would say I'd buy shares of Hindustan Lever and not buy the shampoo.
The buy versus rent conversation is not new. In fact, in the last 15 years, I've hosted the same debate numerous times. But a lot of young people now are veering in the direction of rent and never buy. The math is certainly compelling. You look at the price of real estate in places like Mumbai and New Delhi, and the price tags are enough to convince you to not buy even before you start with the calculations. But my guest today has a strong case for buying a house, and I'm curious to find out what it is. Harshvardhan Rungta, co-founder of Rungta Securities, thank you so much for taking the time.
Always a pleasure, Alex.
So I know that I've had this same conversation with you maybe about 8-9 years ago, where I had a property consultant and I had you, and we were speaking on a podcast. And even at that time, it was said that from an investment perspective, it's very hard to argue in favor of buying a house. But we seem to have veered much further down towards the side of not buying at all. Why do you think we've come to this point?
So, well, Alex, couple of points. One is that the real estate has become so expensive as a ticket size. So if a person is working in a metro, and if you aim to buy a property, it is not going to be less than a crore for sure. I mean, if it could be a multiple of crores, but you will not find it less than a crore. Now, if you're in a career looking to buy a property, it puts a lot of financial burden on that individual. So we've gravitated towards a point convincing ourselves that renting is better than buying. Even if you have aspirations to buy, I think the numbers are put before you saying that, the yield on residential property is 2%. Might as well you put that money in a fixed deposit, earn that interest and pay rent, and you still have excess, surplus to yourselves. I think this narrative has been generated from that point. One, because of the affordability and the ticket size of a real estate. Secondly, because people are traveling and moving around different cities now.
That's an important point, because I think a lot of people over the course of COVID-19 have found that they were able to work from home or from different locations. And I think a lot of people have realized that they don't want to necessarily be tied to one job. They want the flexibility to move jobs. That is a strong reason why people are veered.
Yes,
right?
absolutely. So you have a choice now to search for a job which is in a different city altogether, or your employer may permit you to work from home in another city, and while their headquarters may be in Mumbai, you may be working in Guwahati for all you know. So these possibilities have now been enabled, which further gravitates towards saying that why do you want to then own a property when your job is on the move? The ticket sizes are unaffordable, so why not just rent it? So I think this narrative has been, cumulatively generating pace based on all these factors together.
I wonder what you think about this, and I've had this conversation with different people. The propensity of a lot of young people to not have children as well, because you're hearing more of this double income, no kids kind of a situation. and no judgment here or anything, people are veering towards that as well, and that puts less pressure on people to say we need to create physical real estate for the next generation, and that could also be contributing to this idea, right?
To a certain extent, yes. But when you create real estate, it's not necessarily, it is of course one of the factors that it is an intergenerational asset, but does not necessarily mean that you should not own one for your own self.
Sure.
I mean, there's going to be a time when you're not going to be earning. Everybody is not, you're going to retire at some point in time. Now, at that time, you would always want some kind of stability in terms of a house that you own for yourself. You don't want to be moving around during your retirement period. Suppose you're 70 years of age, I know you don't like your landlord, the landlord doesn't like you, or something goes wrong between the two of you. He asks you to move, and then of course you'll get another place for rent. It's not that you will not get something, but do you really want to keep doing this all your life?
But that is the argument for buying. I'm still trying to figure out all of the reasons why people are now saying, look, I don't want to buy at all. There's also the aspect of the last 6 years that people have experienced pretty good returns in the capital markets, haven't they?
Yes. So Alex, the entire narrative, what I understand, towards renting and not buying has been due to the ticket size, due to affordability, quite honestly.
Right.
Ask any person who can afford an apartment. If you take 10 people who can afford an apartment, and out of which 9 are not buying, it's not because of any other reason. So if you can afford, you will find maximum number of people wanting to buy. I believe it's only the narrative originating out of non-affordability, where you try and convince yourself and others, saying that, look, there is no point in buying, might as well rent it. So I think it's more of a consolation kind of a approach rather than rather than really logically thinking about it. I'm telling you, pick up 10 people and ask them who can afford. Would you be buying a property? Most certainly they will be.
So what is the case that you're making? Ultimately, you're saying that people should own real estate. It's a necessity, right? It's not something that is necessarily negotiable. It is roti kapda makan. That's what you're saying.
Correct. So I'm saying, see, there are two ways that you'll have to look at things. Everything cannot be looked at logic, and weighed in the parameters of logic. Now, if you're going to ask somebody to say like, hey, if I had 1 crore rupees, I put that in a fixed deposit, earn 6% or 7% on it, with that interest or lesser than that, I can stay in the property worth 1 crore. I mean, that is logic, right? But everything doesn't work like that. In that context, I would not be able to take a shower any day, because I would say I'll buy shares of Hindustan Lever and not buy the shampoo. And then I'll be wealthier 10, 20 years down there, 30 years down there.
The whole coffee argument, right? You don't drink coffee every day, instead invest in a share of the company that sells the coffee.
So that doesn't make sense all the time. So there is a basic necessity, human necessities of food, clothing, shelter. The roti kapda makan that we spoke about, right? Now, when you have roti kapda makan, the food, clothing, shelter as logics, you don't put numbers and you don't start calculating returns on that, and then you evaluate whether I should wear clothes or I should rent clothes. I mean, you can even get into that argument, right?
Yeah.
But theoretically speaking, the wedding dress that you wear ideally should be used only once.
Yeah.
And that cost a couple of lakhs. So you'd say that I have bought this piece of a ghagra or a sherwani, and I'm using it only once, which is worth about, say, 2-3 lakhs. So the cost of wearing that is 3 lakh of rupees. Might as well rent it out.
Irrespective of the price tag, I'm saying even somebody who's not earning as much, for them a 60,000 rupee ghagra or 70,000 rupees, the equivalent of somebody who's earning more and spending 2 lakh, 3 lakh, effectively, based on relatively speaking.
The question is that if you're wearing it only once, then somebody puts in your mind saying that if it costs 60,000 for example.
Why are you doing that? Just rent it.
Yeah, might as well rent a sherwani instead of buying 60,000 rupees worth of a sherwani. So that logic doesn't apply, right? At all times. So I'm saying there are few things that you have to look beyond calculations. There are few things that you don't have to get into a narrative which is being formed, saying that, it doesn't make sense to buy. Now, what are the reasons that you would want to consider? So one, as I said, it's a basic necessity, right? There are other things that come along with it. As I said, let's start with, say, retirement. Now, if you, and at the same time, I'm not saying that you need to buy a house which is beyond your affordability.
We'll come to that in a bit, but then let's list out the points that you make.
So the one is that, you'd always want to have a secured roof over your head. Now, how do you get that unless it is your own?
You can't.
Because you cannot get that. So you'd want to, at the end of everything, want to make sure that you have a roof to yourself, where you're not under the threat of being asked to leave. Rents are not affordable. So you're worried when my rental agreement comes for renewal, what is the landlord going to throw at me? So you don't want to get into that kind of a scenario. So you want one place for yourself where you can peacefully live with yourself and your family. Okay. The other, if I'm talking about a case of uncertainty in life, in your career, in businesses, a lot of surprises could come through.
You heard cases?
There are two cases I can talk about. In fact, one case is during COVID, a friend of mine was working at a very senior level in an MNC. He was in Mumbai and he was in a rented apartment. So we had a conversation a couple of times saying that why don't you buy, which you can afford, of course. So he said, no, rental works better in terms of return on investments, etc. I said, okay, fair point. Now hit COVID and he lost his job. And, of course, he sustained it for a month or two. And thereafter he was like, now I need to do something about it. Let me go back to my hometown. So I said, what would you do? Because the idea is that I don't want to pay this kind of rent that I'm paying. So I'll go back to my hometown. So I said, why would you go back to your hometown? What about the house over there? So he said, I have an ancestral home over there where I can go back. Now think of it. If his ancestors would have also thought the same and said that, look, I should rent it out and never make a property.
But the affordability of real estate at that time, Raj, was very different.
We'll come to the affordability part of it, as I said.
Yeah, correct.
So we'll touch that point. But I'm saying the logical side of things in life. You'll never be able to buy a luxury car if you think that a car is only a mode of transport. Then even a basic four-wheeler is good enough for you. So we're not getting into all of that.
Sure.
So I'm saying, imagine a situation that the roof that you have for yourself is basically during those tough times that you may face in your life.
Yeah.
You may be into a business which is doing very well today. Tomorrow if something happens, and if you can't afford the rent, then what do you do?
Yeah.
So I have had cases where people cannot afford renovating their house because they're going through a rough patch in their life, but at least they have a roof to themselves. So they walk into a house which is not renovated, but at least they have a place to sleep. Now, if you cannot afford even renovating your house, what if you cannot afford paying the rent?
Fair enough.
You don't even get that margin of safety to stay in that city to explore something more, right? Like my friend, as I said, he didn't have the margin of safety.
So this is one where this person lost their job. What is the second case?
The second is if you're a parent, and now you have children who are going to get into the career. Not necessarily they will settle into a career immediately to be able to afford a rent. Right? And that time you tell them that, look, hey, it doesn't make logical sense to own a property. I don't have, because I always thought like this for myself. Why don't you also think like this and go and take a property on rent? Doesn't work like that, right? If you can give them a security.
Okay, that is an ideal case, but I think a lot of people go through, and a lot of people actually, frankly, work in cities outside of their hometown, right? So, I mean, even my case, my parents live in Pune. I've been renting since I was 18, 19 years old, right?
No, fair point, Alex. So I'm coming to now again that where to buy, affordability part. It's a logics to buy.
Yeah.
Okay, we've had certain cases where the daughter has not settled in their marriage and she comes back for whatever reasons. Now, again, what do you do in a situation like this when you say that, look, I am on rent myself, I don't have space in my house, you go and take something on rent again. So I'm saying there are several scenarios. Now, it may not eventually...
This is again a security angle, right?
Security angle. I'm talking, the house is only for security purposes I'm talking about. I'm not even broaching onto the topic of investing and the returns that you generate on it.
Yeah.
I mean, I'm just taking it as a food, clothing, shelter. I'm just taking it as that. You don't apply too much of mind into these things, is what I'm trying to say. The moment you start applying mind to this, as I said, you can't take a shower, you can't eat, you can't drink coffee, nothing.
So, okay, so the case is made and it's a strong case. But then my counter to the first case that you had is that this individual lost his job and he had to go to his hometown. Hypothetically, if he had bought a house and we had bought that house on EMI, effectively that house is not his, it's hypothecated to him.
Correct.
He owes the bank, and in the event that he does not have an income, he's not able to pay the EMI, effectively he would lose the house. So that's not a pleasant, and people have to take 15-20 year loans. It's not like they can afford, especially in places like Mumbai. They have to take very large loans, Harsh. So how do you deal with that situation?
Now in this particular situation, he left Mumbai because he couldn't stay in Mumbai any longer.
Right.
Had he been able to, no, because he didn't have a regular source of income in that context, so he couldn't pay the rents.
Yeah.
Now, if he had the house of his own, the EMI, the banks gave a moratorium at that point in time. When you couldn't afford, they said, okay, fine, I'll come back to me later on. I'll give you a moratorium of 6 months, etc.
But that was COVID. I'm saying, it's a black swan event.
I'm talking about one situation. I'll come to the other situation as well. In the other side, he could have stayed in Mumbai and found a job for himself. But he needed time, which he did not have in this particular case. Now going back to his hometown and applying from there again, it's a new exercise altogether. Okay. Being here in Mumbai, it was easier for him to have networked and got something through. But anyways, the other scenario saying that if it's not a black swan kind of a thing, where it's not COVID and you still lost your job, banks do accommodate. If you go back to them and say, look, I've lost my job. I'm looking for another job. Give me a break for 2-3, a pause an EMI for 2-3 months. Give me some time. They do accommodate. It's not that they don't accommodate. But at least you have the roof to yourself.
Sure.
So again, now, when we're talking about these scenarios, these are all hypothetical situations.
Yes.
Okay, now an individual may not be requiring to, and God forbid, he needs to go through something like this. But if something needs to go through, I mean, imagine a situation where you don't have a roof to yourself. I'm only talking about, while you're putting all the time, you're talking about one scenario where an interest, the returns on real estate is negligible.
No, I'm talking about, I mean, just on the case that you've spoken about, where you're saying either you're renting or you're buying a house. If you've bought a house and it is on EMI and you lose your job, then it's compounding the issue, is it not? But I get the point that you're making. You can negotiate a moratorium.
I want to add one more point here. Now, when we're talking about buying, I'm not necessarily saying that you buy a property in which you really want to live.
Right. So that's where we want to come to, right? So affordability, at the end of the day, we circle back to that. And so therefore what you're suggesting, and if I understand you correctly, Harsh, what you're saying is if you're working in South Bombay, it does not necessarily mean that you buy in South Bombay.
Absolutely.
And you don't necessarily have to even buy a property that you're going to live in immediately. You might even buy it in a tier 1 city outside of where you're staying right now. I'm wondering if this is what you're saying. If you have family, say in Pune, or if you have family in another place, in even Kolkata, or in certain parts of North India, in beyond Gurgaon, or even Noida or something like that, you can buy a property there so that you have the security of having a flat.
Correct.
Right?
So all that I'm trying to say is that during your lifetime, try and own one house.
Sure.
It need not necessarily mean that it has to be in the place of work that you're.
Right.
I'm just saying buy one house for the security purposes. If everything goes bad, okay, you can go back to that house. Now, hypothetically, you're working in Mumbai, but you have some base or something. You come from Pune, for example. You said your parents are in Pune. Or you're coming from a place, say Nagpur, for example. Or you're coming from Delhi, or you're coming from any other place. Just ensure you have one house to yourself.
Sure.
It could be an ancestral house which you've inherited, so that is your house.
Great.
Then you don't need to buy another one. Okay, if you already have something inherited. If you don't have ancestral house, you don't have something that you've created on your own, then there is a problem.
So then let's get to it, right? So you mentioned that if you have a house to your name, and I think that it's important to be very clear about these things, right? Especially if you have siblings, then your parents need to make it clear, is it meant for one or the other, or is it meant for both, right? Or three, as the case may be. But if you have property to your name, let's talk about when you don't have property to your name, right? At what point do you go and create this asset? Because on the one hand, you're saying that you need to have that security. On the other hand, you're saying that your earning potential in the early years is not necessarily great, and you will be straining. And the ability to get a head start on your investments, equally, people say you should start early. And you create a corpus. Suppose you're 35 and you've struggled and you've managed to hit that 1 CR, which is the landmark for a lot of people. Do you want to break it at that point, or would you say that you should use the time, another 5-7 years, where you can accumulate a lot more, create a large enough corpus, and then pay and buy a house?
Yes. So one thing you'll have to keep in mind that there's going to be a down payment that you have to make. Okay. So affordability. Now come to affordability. So all that we're trying to say is that own one house which is within affordable limits. So affordability would mean that first you have to ascertain which is the place you want to buy that property. So it could be a small 1-bedroom apartment, it could be a studio apartment for that matter.
Sure.
Again, you have to work your affordability. You have to be able to pay the down payment, which is 20%. So if you're looking at a property worth 50 lakhs, or you're looking at a property worth 1 crore, 10 to 20 lakhs is what you have to pay from your own pocket. So be ready for that. The moment you've accumulated, then that means you're ready to buy something. The second point is you always have to be mindful of the EMI commitment.
Yes.
It should never cross 50% of your take-home salary.
And this is all EMIs or just the home loan?
All EMIs.
All EMIs.
So if you're having a personal loan or a car loan or something, all put together, your EMI per month should not be more than 50% of your take-home salary, not C2C.
Sure.
Okay. You have to be very careful that your EMIs don't cross 50%. Right. Now, if that means that the size of the house needs to be reduced further, or you need to go to some other city altogether, you may have to consider that. Okay, and that city cannot be an absurd city from nowhere.
Yeah,
I mean, if
you might want
Mumbai,
to at some point say that if I'm not in this job, I should be able to go and live there.
Correct. So eventually you should be able to go and live there.
Yeah.
So if you're in Mumbai, for example, then you may look at Pune, for example, and you don't need to be in the prime location of Pune.
Yeah.
It could be just one house lying there that in case of the worst case scenario, you can go back and have a roof to yourself.
Or even Navi Mumbai, you probably
Navi
get
Mumbai for that matter, or whichever proximity. So other cities would have a similar kind of a situation where you're in the heart of the city, the suburbs or the distant suburbs of that city would have affordable housing.
Yeah.
So there are ample number of opportunities for affordable housing.
Sure.
So if somebody says that, look, I don't find anything, it could be because you don't like anything. So that's fine.
So that definition is great. You say 20% you should be able to pay as down payment. You should have that kind of liquidity. And 2, you should be able to put 50% of your take home as an EMI. So that's a good definition to have. Now let's talk about the current scenario, because I think, I mean, of course, there are some projections, Harsh, that you could have another 50 basis points of cuts, but you already had some reduction in the rates, right? So if anything, now is a good time if you're considering the festive season is near. And I don't know if you're going to be able to identify a property, but maybe you should go out looking. Having said that, what should you bear in mind about the way that you pay, right? Because we've established that you only go out at this point if you don't at all have a house and if you can afford it. And so with that caveat in mind, what is the way to do it? Because there are numerous calculations for this as well.
Correct.
Should you prepay? Should you not prepay? Should you invest the surplus? What do you do?
So the first thing is very clearly, the discussion we are having right now is for people who can afford and have been told not to buy because of the calculations.
Yeah.
Okay, so we're very clear on that part. If you are within that bracket who's not finding it affordable as of now, then this could be a thought for you to action it tomorrow when you come into the affordability bracket. My only grievance that I have is those people who can afford have been brainwashed to believe that it is not good to buy.
Sure.
So we're having a discussion purely from that point.
Correct. And we've established that they should go out and buy at least one house.
Correct.
If they don't have ancestral property.
If they don't have any property themselves, have one house that you can be secure for yourself. That's all that we're trying to say. Now coming to how should you go about designing it? Okay. So one is, if you're buying for yourself, which could be potentially a place that you'll be living in case everything goes wrong, then you need to make sure that you don't take a decision in haste. Okay, because now suddenly somebody will say some pocket in Pune is a popular pocket, and now some lot of action happening over there, some highway will come over there, and you know, when you put all those things, then you get, you deviate from the main objective, which is eventually you may have to live there.
Yeah.
Okay, so identify something at your pace. Do not rush into it, because the moment you rush into it, the other factors take precedence and not the basic concept which you had thought about. So that, take your time. Do not get lured by some offers coming by builders or RBI going to cut rates.
And don't even think of potential resale value and all of that, right? Would you say
eventually, yes, but you'll see why I say you'll have to look at resale value, because eventually there has to be some marketability of that property.
Yeah, sure.
You may not
but
want
it's
to sell
hard
it.
to sell. It's hard to sell real estate.
So in fact, again, now if you want me to give you an example of one of our clients who had this kind of a thing. Now, they were going through a tough time in their life, okay, for whatever reason. They went to business, the business was not doing well. Now, they sold off virtually everything else that they had, okay, that included the financial assets, they sold off the jewelry, they sold off everything that they had. They even put the house out to sell at that point in time when they were not doing well, and it was a stressful period for them. It took a while before they could even finalize somebody to look at buying it. And in that period, while they could not sell their property,
things turned around.
Things turned around for them.
Oh, great.
So in that context, the house, because it was illiquid in nature, it just
There's always a silver lining.
There's always a silver lining. Now, in
Okay.
this case, everything that was liquidable got liquidated, including the jewelry, including financial assets. It's T+3. The moment you sell, the third day you'll have money in your account, right? So all financial assets, everything got sold. Whatever could be sold, got sold. What could not get sold or was illiquid in nature in that context, or took time
So there are positives to it being illiquid.
So that's exactly what I'm trying to say.
Okay.
I mean, it could even work in your favor when it is illiquid for that matter.
Sure.
Now,
but a lot of people do have trouble selling property that they've got. Yeah,
of course.
But having said that, coming to that original question, which is, if you have decided, and maybe they've listened to you and they've decided to change their mind and buy a property, what are the initial few things that you would say you should do?
So one is, of course, affordability. Very clearly,
Sure.
I'm emphasizing on that part. I mean, make sure you can pay 20% or even more for that matter. Ideally, 20% is good, because you'll have other financial responsibilities which you don't want to put everything into real estate. So 20% of the house you should be able to afford for sure. The second thing is the EMI, again I'm emphasizing, all EMIs put together should not be more than 50% of your take-home salary. Be very mindful of that and don't estimate that in future I'm going to get a promotion. Now when that promotion comes in, I can afford it, so might as well extend a little bit today. No. I would rather wait for the promotion to come then, because there's no hurry. You're not going to move in today in any case. Whatever is your present income, it should not be more than 50% of that, very clearly. Third, you have to be mindful that it is a property eventually if you're not going to, because see what happens is with your career, you may want to advance your house as well. Today you may have bought a 1 BHK. Now 3 years, 5 years down the line, you believe that, okay, now I can afford probably a 3-bedroom apartment. So you may want to sell that 1 bedroom and buy a 3-bedroom closer to your workplace now, because you've now probably grown in your career. So there has to be a marketability of that product eventually. So don't be, so that's where
completely blind about it.
That's where ancestral properties don't work, because they are not saleable to that extent, because it's it's intermingled with a couple of other family members and there are a lot of sentiments around it. So ancestral property is the worst case scenario. I mean, otherwise try and accumulate and generate one property yourself. Do not get lured into offers, because this is not a decision for an investment. So don't look at it as a short term. Take your time to decide. Look at the locations, because the property also need to be maintained. If it's very far away, you're in Mumbai, nothing to do with Bangalore, and you buy a property in Bangalore, you'll have to travel back and forth to take care of the property. So might as well buy somewhere where you believe it's easy to manage, it's conveniently located, it has a resale value, it is within affordability. I think these are the basic parameters. And if you can afford, then do not get confused with the narrative of investments being better than. I'm into the financial services business myself. So I am with surety telling you that if you put numbers to this discussion,
it will not make sense.
Buying versus renting, buying will never make sense. And so it's an argument which we're not even getting into. There are other non-monetary benefits that we're talking about. It's a wealth preservation tool. You'll find all the super rich buying properties now. So they also have better opportunities to put that money for returns purposes, right? But there's something that they're looking at for which they're buying real estate. So just change your mindset a little bit. Do not
be open to the idea.
Correct.
And so therefore, I think it's a strong case that you're making. Harsh, thanks so much for joining me today. All right. Well, that brings us to the end of this edition of MoneyWise. It's been an absolute pleasure bringing it to you. Let us know what you think. And do stay tuned. This is NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Who better to talk about the implications of the GST reform than the individual who's joining us in studio right now, Navneet Munot, Managing Director and Chief Executive Officer of HDFC AMC. Navneet, thank you so much for coming by. Pleasure having you in the studio.
Entirely my pleasure to be with all of you.
So your initial thoughts, were you surprised, positively pleased by the pace at which this has taken place, that mammoth meeting that took place? I think all of us were caught by surprise. We were planning for a Friday.
So I think you have to give it to the government, not only for the policy prudence over the last several years, but also for the agile execution and effective communication. I think these two get added to the policy prudence, and we see in the context of rest of the world, we really feel proud to be an Indian today. I mean, look at the way the largest country in the world, the largest economy in the world has been communicating to the rest of the world versus what the steps that we have been taking. And on one side, you are seeing increasing tariffs and putting more burden on the consumers, while saying that our tariff revenues have gone up to the treasury. On other side, what India is doing is, I want to give more benefit to the larger section of the society. This is what the Bahujan Hitai, Bahujan Sukhai philosophy versus doing the tax cuts for maybe a few rich people in US while taking more tariffs in the form of tariffs from larger set of consumers. I think there is a contrast in terms of the way we are pursuing our policies. And you can see that on 7th of April, correct me if I'm wrong, Nifty touched a low of 22,000 or somewhere there. And despite 25% tariff, then another penal 25% tariff, and some of the other news flow, we have made a double-digit gain since then. That day, nobody would have predicted that in next couple of months, Indian markets would actually be higher than lower. So I think, I'm sure we are taking right steps.
I wonder, Navneet, if the person of the year this year would be GST or would it be tariff or somebody else?
No, I think all kinds of, the benefits, the way they have flown to each and every person in the society. So you have a rate cut by Reserve Bank of India, liquidity injection by Reserve Bank of India, creating a more conducive environment for higher credit growth. You had the personal income tax benefit, and now it has been followed by the GST rate cut. And it is not only about cutting rates and taking less taxes. It's also about, like a Chanakya said, that the government should take taxes the way butterfly takes the nectar, something like that. And I think this is what the simplification aspect should not be neglected. Taking advantage of digitalization, trusting your people, trusting your citizens, to have faith that over a period of time we'll consume more and we'll pay more taxes, or we will earn more and we'll pay more taxes, and that will create a virtuous cycle for the economy.
But guys, I was thinking about this, right? Since January, I mean, the RBI took the mantle and reform after reform, or measure after measure, and now we've had the government come in full drive. It's been 9 months of some serious action on the India side.
No, then my question is, then why are the markets not responding in that fashion? Is there an underlying pain or concern that we're not seeing right now?
last 5 years, I mean, look at the returns our funds have delivered. I think you cannot have that month after month, right? Yeah. I mean, then imagine, I mean, if every month market delivers those kind of returns where the markets would be in few years' time. I think it's also about because...
Most of 2025 has been tough.
See, we had 3 years of 20% plus earnings growth.
Yeah.
I think this is a year of consolidation. We saw some moderation in economic growth as well as a corporate profit growth. Now I think while working on capital expenditure, that we revived the investment cycle. Government did the heavy lifting, hoping that private sector would take up. Also now creating a demand pull, which gives more confidence to the corporates if you see a higher consumption, higher investment, because you know that global environment is not conducive for exports. But even then, even there, I think all these measures can also lead to India taking share on the export side. I think semiconductors is a classic case what Prime Minister talked about, that these are the digital diamonds, right? I mean, so you are thinking of like creating
when the price of real diamonds is dropping. It's time to go digital. My question for you, sir, is that as people have more money in their pockets, what will they do with it? Now that money has come in from tax cuts, from GST savings as well, are you hoping that they make the decision to invest more, to buy more insurance, to buy more mutual funds? Is that something you're actually pegging in?
Of course. I think the panacea for India is higher growth with macroeconomic stability. And this is what the government has done over the last decade or so, without compromising on macroeconomic stability, without compromising on political, social and financial stability, give a push to the growth. And a highly balanced approach. That's why I use the word policy prudence, agile execution with effective communication, not only to domestic stakeholders, but to the global stakeholders. And this is the game we have been playing for the long haul. I think what we need to do is take the absorption capacity of the economy to a higher level, that once you have more savings flowing into the market, as of now we are seeing a bigger flow of domestic savings. At some stage we are going to see higher flows from the global investors also. How do we create a bigger absorption capacity where the potential growth rate of the economy itself can go up? And at $2,500 per capita, 1.4 billion people, this is where 18% of humanity is. This is where the youngest population in the world is. Will be the biggest supplier of new consumers to the world, will be the biggest supplier of labor force to the world for next several decades. So you have to ensure that you take full advantage of that demographic dividend. And what he talked about that last 9 months, the reforms that have been taken will keep us in good stead for next 9 years.
Wow. You know, on that note, and the flows that have been coming through to the domestic mutual fund industry have been absolutely fantastic, right? And if I look at the top schemes in terms of assets under management, I think at least 2 of yours in the top 5, top 7, right? I'm just wondering whether the way that companies are raising funds for capacity addition for plans in the future, it's shifted, right? They're not necessarily going towards debt. They're able to raise equity, and there is so much appetite that is being directed through you. Do you think that that will only gather pace with the kind of funds that are available? Because, for example, 1,000 crore IPO comes through, your scheme has 80,000 plus crore. It doesn't require a lot for you to deploy.
No need.
No, sure.
Day before yesterday, Ramdev Agarwal said that the monthly flows could hit 1,50,000 to 2 lakh crores. Are you of that camp too? So it's 2 questions rolled into one.
So I think when the monthly flows were 4,000 crores, had I told you that there will be 7x in next 7 years, you wouldn't have believed it. So I think we have to look at in the context of the GDP that we have, the savings that we have. India has been a nation of savers for generations. What we are doing now is becoming a nation of investors. And I think this is very good for the economy. In a way, we can say that with pride that we have become Atmanirbhar when it comes to capital market. Now, I won't say that we don't need foreign savings. I think our investment needs are humongous. Humongous. We need more foreign flows for sure, and at some stage it's likely to come both in the form of FDI as well as in the form of FPI. Now I'll give you one data point. If I look at United States, there would be $50 trillion of institutional money which can potentially look at India as an asset class.
Okay.
Think about 1% switch. What amount that is? $500 billion. Now to put that number in context, we have hardly got any money in last 5 years. But the potential for us to convert 1% of their investment assets today is 500 billion. That's $500 billion. That's why I've been harping on the point that what we need to do as an economy is to increase the absorption capacity of the capital. You meet the corporates. Just now I saw you were talking to someone. So two things are important for corporates and for us. Like one is the growth and second is the return on equity. Growth, of course, has slowed down a bit, but we are all hoping that it will pick up and government is doing whatever it can. On the return of equity, you have three sources. You have the sales margin into the asset turnover, into financial leverage. Now, because of the bad experience of 2008 to 2014-15, everybody has been on a deleveraging spree. It will take some time for them to leverage. They have been focused on margins. I think not so much on the asset turn. We need a little bit of more growth momentum, and then what it will create is maybe a risk appetite where they take more leverage. Equity is easily available today. They will take leverage, and of course, they will put up new capacity. We need to focus on everything rather than just on like a macro stability, because growth is very, very critical in the long run.
So in a sense, I want to make sure that you've answered my question, because you kind of did.
I'm sorry for
be clear. I want to be clear that is what you're saying. You're saying that right now they're not necessarily raising a lot of debt, but you're saying it's necessary.
At some stage, as of now, because the equity flows are good and companies are able to raise capital, and also you are seeing like new business models coming to the market. Some of these companies wouldn't have thought of hitting the public markets at that stage of growth, but markets have kind of like
been conducive.
Has been a conducive environment, which is very good, because this will kind of fuel more entrepreneurial energy in India.
This whole thought, Navneet, that 5 years ago, agar promoter bech raha hai, it was taboo. Now we see, for example, in HDFC Mutual Fund, subscribe to 80% of the total sale that the promoter is making, and the stocks don't flinch. What is this?
I think two ways to look at it.
How do you also agree to do that?
No, also you have to look at it that in India, the promoter ownership is very high, right? You don't have many countries where you see like half the market owned by promoter. That promoter could be Government of India, it could be a multinational company, it could be a family, it could be a private equity and VC guys. Particularly the private equity and VC over a period of time are going to reduce their holdings. And there could be few promoters who are looking at maybe a new lines of business. Maybe there is a family succession, want to get a more professional CEO in place. Many reasons for that. And market environment has been conducive. At the same time, I think market is discriminatory. I don't think that every IPO or every equity sale is meeting with the same reception. And I think it's better that we have more discrimination than chasing any kind of paper. But more interestingly, if you see the behavior of the foreign investors, you see a greater participation in primary market, whether it's the blocks or IPOs, than the secondary market.
We saw that yesterday as well.
Almost every IPO, you look at the list who are the investors, the same set of investors.
That's an important observation, because then it belies the claim that foreign investors are not hot on India because there is a basic problem. Clearly they are.
You look at the primary issuances.
Yeah, they're just picking their battles. As someone who is so bullish, like, you have been through this interview and since a very, very long time.
Bullish doesn't mean, I've also been highlighting for over a year that valuations have been running a little ahead of fundamentals. One need to be cautious.
Even now?
Now I would say relatively, because of the time correction we have seen, markets have been lower than where they were a year back. And of course, I think a little bit of earnings growth, and now expectations that earnings growth is likely to catch up.
So let me come to my core question. Where does an astute investor who is betting on, not looking at daily trade, etc., look at if they are as are buying in to the India story, then what should they look at? Should they look at new economy? Should they look at the tried and tested large cap banks? Should they be a little more greedy, a little more risky? What would you advise?
So astute and daily trading is an oxymoron, right?
No, which
when you said astute, not that, so if you are an astute, then you won't do trading.
Exactly.
I think if you are an astute, you would take a long-term view on India. That I think with the demographics that we have got, I think the policy reforms that have been put in place, the infrastructure that we are building, whether it's physical, social and digital infrastructure, and I think over a period of time, it's going to be a multi-pronged growth model than a very narrow set of growth models most of the other countries have seen. The only market that comes to your mind closer to India is like United States, where you have variety of businesses focused on growth and capital efficiency. I think India can do that. The only difference is the risk appetite there is much greater than what we are seeing in India, despite the fact that equity and market environment has been so conducive to raise risk capital.
Sridhar Shivram, Investment Director at Enam Holdings, joins us right now on the show. And Sridhar, good morning and thank you so much for joining in.
Thanks for inviting me.
No, the pleasure is always ours. You bring out points which a lot of mere mortals like me fail to look at first glance, and I'll come to those detailed points too. But just the broad 50,000 feet view, are you happy and enthused by the moves that have been taken? A lot of it was on predicted lines, but there was some better than expected delivery from the government as well.
So if you ask me, I'm happy with the moves that the government has taken now. We've been saying earlier that a direct tax cut benefits only 2 to 3% of the population, whereas any change in the indirect tax benefits 140 crore people and has a far-reaching impact. So I'm happy to see what has happened on the GST side, because this will have a much greater impact, but over time. So I think the problem is market often expects everything to happen the next day. That may not happen. We have a lot of other issues, on the geopolitical side or on the macro side. But if you ask me from the government side and RBI, they've done so much. There's only that much they can do. The rest is up to the corporates and the earnings and all the other factors to play out. But that's how markets are. They're never linear, right? You have phases. So I have no complaints. I think they've done everything. And markets will play out over a period of time.
Most certainly. Is this meant to be, Sridhar? I mean, yesterday I was talking to Madhu and Ramdev, and they were saying that the view was that, or one of my interpretation of the view was that it's almost a measure that is even bigger than the budget announcements that are made at times, this simplification. And it has, as you said, a longer term implication, and people should look at it that fashion, that it is a move of such a magnitude that the benefits will play out over a 12, 18, 24-month period, and think of them that way, and they will be very large in nature. Would you second that?
Yeah, so I think when I look at the details, it sort of gives me a feel that the benefits are more to middle and lower middle class, and that's how it should be.
Right.
There are some, taxation which has gone up, some sin tax, and I have no complaints on that. It will neither have an impact to a large extent on the consumption either way, but the simplification and the reduction of taxes at the daily use items, those will have a longer lasting impact, and I think over a time it will play out. And the other thing is simplification, that you don't have so many tax slabs now, so it is a much easier and much simpler way. And I think I'll have to give full credit to the government for every reform measure that they have taken over the last, say, 3-4 years. And finally this, I mean, this is something that we've been saying, that indirect tax benefits more than a direct tax benefit. I'm not saying direct tax is not welcome. It is welcome, but
this is better.
I would prefer an indirect tax, and that's how it's played out.
Now, you've been a dove on inflation, and yes, I presume that you believe that this plus a set of recent moves are further deflationary or anti-inflationary.
Yeah, exactly. So I think not a lot is documented that a cut in GST also helps the CPI inflation. A rough calculation suggests that it should have an impact of about 50 basis points on a durable basis, because this is a cut in tax and the prices go down.
Right.
Now, will the entire 50 basis points stay? We are assuming at least 25 stays, because some price increases over a period do happen. But even a 25 basis points on a durable basis reduction is significant. So we were already on the dovish side as far as inflation is concerned. So our number for Q3 is around 2%, RBI is at 3.1. So we are almost now 100 basis points away from where RBI is. And I'm reasonably sure, which happened in Q2 also, that RBI came down closer to the number that at least we were suggesting. The same will happen for Q3 also. But the question is there more room for rate cuts? We think another 25 basis points, sure. And if Fed is supportive, that if Fed cuts some more, then we have more rooms. I think the joker in the pack here is how rupee is behaving. And so if RBI has to manage multiple legs, they'll have a close eye on how rupee is. And that may also determine whether they want to cut or not. But in our view, when we look at all of it put together, we think another 25 basis points, they'll have room.
The Fed seems to be given after yesterday's data. I mean, the overnight data in the US isn't exactly great for the labor force numbers,
yeah,
right?
so we don't know how Fed is reacting. There are a lot of political issues happening there. We think that so there are some headwinds on inflation in the US also. So we don't know how that plays out. But when we look at, I'm not an expert on US, but most people I speak to think that another 25 to 50 basis points of cut in the US is possible.
Got it. Okay. So how does the investment landscape change between before September 3rd and after September 3rd, if this has the potency to make investment rationale change, the GST 2.0?
See, we don't make such drastic changes because of a policy that has come just now. We'll want to wait and see how this plays out. Surely this has a boost on consumption. The expected number is say around a lakh crore over a period of time, and we'll have to see how this plays out and what happens, which sector. It is. I'm not in the camp that if there is a reduction in GST in say in auto, it will benefit auto. I'm not going to buy more cars, but it may benefit in some other segment. Because if I have saved some money, I was anyway supposed to buy a two-wheeler or a four-wheeler. I'm not going to buy another one, but I saved some money, so I may be using that for something else.
Okay.
So it's a second derivative impact which I have to look at, and it's possible that I may be repaying a loan. So that's what I said, that it's not a direct impact. I'm not going to change my consumption view because something has happened, but I do have surplus in my hand. And how does that play? That is more critical.
But you don't believe that for some people who may have thought that prior to the GST cuts, this thing was just slightly out of reach. Maybe now it's within reach. I can muscle up money from somewhere else which I was supposed to spend and instead buy a two-wheeler or a car. That may not happen.
May not be for the car, maybe for a two-wheeler.
Two-wheeler.
Yeah.
Maybe not for a car. Okay.
So to that extent, yeah. And some people argue that if you're buying, for somebody who's at that level and he's using a loan, then the loan EMI isn't that different.
That's true.
But as I said, there is a saving, and the question is, how does that saving play out? Is it discretionary consumption? Is it some over leverage that gets paid out, so the leverage comes down, which is great? So time will tell. But as I said, on a broader scale, I think it's very positive. We needed a push for consumption, and that has come. We'll see how it plays out.
But I wonder, sorry, just one last point on that. I want to probe this a little bit more. I remember budget 2025, the income tax cuts, and the post-budget meeting that happens at the Motilal Oswal office. Everybody was talking about how will the 12,000 rupees be spent, right? Consumption, maybe savings, maybe investments, maybe consumption, but consumption. Then this, plus the interest rate cuts. You're not very gung-ho on consumption somehow, or is it my imagination?
No, I'm not very gung-ho on consumption because a lot of other macro factors are also playing out. So keep in mind that, this has to come from somewhere. Government is not imagining, okay? So where is this coming from? And our understanding is that this comes from reduction in capex spending, not only from the center, also from the state.
Right.
Now, a reduction in capex has a longer lasting impact. So it isn't like, I would have been happier if we did a PSU divestment, some privatization, massive, and we got a bonanza. And from that bonanza, we gave out, this tax cut. That's not the case. So sum of part is zero here. So you're reallocating money from one to the other.
But hence my question, Sridhar, that therefore capex may suffer but consumption may not.
So capex suffering has its second derivative impact, right? So the contractor is not getting more business, and then his labor is unemployed. So which is why I said, if you ask me, the sum of part is zero right now. I would have been happier if they had done, asset sale and use that asset sale proceeds to give a bonanza. That would have been it would have had a larger impact. I'm not saying this will not have an impact. I'm saying that this will play out. As you would have seen, I had said earlier, even on the budget speech, that I'm not very enthused with the impact that a direct tax cut will have, because you and me also got benefits. Does it make a difference to either of us? No. I mean, did we consume more just because I got some 5,000-10,000 extra? No. Maybe the person who was earning 25,000, he benefited. But in the overall scheme of things, it didn't add up much, because we've already seen, say, 6 months of data. So that's my point, that this will add up, but over a period of time. And I would want to see which sectors will benefit. Maybe at the lower end, the discretionary spending is what I would want to, if I have to take a guess, I would say discretionary spending would benefit.
Okay. Now, the other aspect of talking to Sridhar Shivaram is that he's a hawk on data. He looks at data in multiple ways and then tries and tries. So I'm now trying to urge you to not hypothesize and tell us, based on the data that you've seen, or based on your assessment of how geopolitics has moved, maybe the thawing of India-China relationships and what that could do to availability of rare earths, etc., etc. Is there something that you would want to, that you are pointing towards or leaning towards in terms of the outlook ahead for themes, for investable ideas, what have you?
So I think what is happening is that our macro on the forex side has deteriorated.
Okay.
Which is what we are seeing on the rupee. And the current account deficit, our net FDI has been literally zero for a while, because even though we get FDI, we get outflows from corporate selling and the private equity selling. We saw a large block happen even yesterday. So this has an impact on the forex reserves, and my guess is the forex reserves, as we get more and more data, this will come down, plus we'll have a hit on the exports. So this has certain impacts on the liquidity in the system. So I would guess that Reserve Bank in the past, in the last 3-4 months, has been very dovish till they became neutral in the last policy. They may sound a bit more hawkish, trying to balance inflation and currency.
Okay.
That may have some impact on the the markets, which is in the short term. Even though we've had, so if people ask, so much of good news has come, why has the market not reacted? This is possibly the reason, that there is a possibility that you can't ignore currency. When you have a current account deficit, you know that your exports are going to get hit. Whichever way we see it, our exports are going to get hit. Plus, we have an issue on the net FDI.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people. like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I or hold buy time to ICICI? invest?
Welcome to this episode of Building Legacy. Today we're going to be talking about the structures that need to be inculcated within family businesses to keep them going. Family businesses, of course, are the backbone of our economies. They shape industry, create livelihoods, and pass down more than just generational wealth. In this series, we delve into the heart of family-run enterprises where personal relationships and professional ambitions often collide. In this episode, we deep dive into how a family-run enterprise can adapt for the future with clear roles, advisory boards, and family constitutions. Joining me, as always, is Boston Consulting Group's Janmajay Sinha. But we also have a very special guest to take us through today's episode, which is Ajay Sriram, a respected business leader who has successfully navigated the complexities of a legacy business through the decades. Welcome to both of you, and thank you so much for joining us on this episode of Building Legacy. Mr. Sinha, I think this episode is a crucial one because it comes to the heart of how to and what to do to successfully run a family business.
It's absolutely true, Tamanna, and it's a great pleasure to have Ajay with us, who is actually a doyen in this area, and I've learned a lot from him. So, if you really look at it, all companies come under the rubric of SEBI, the Competition Commission, the High Court. Who does the family come under the rubric of? The parents.
The patriarch.
Yeah, the patriarch, the parents. But there are no rules. They can do it whichever way they want to. And so, when you have a large business, then what do you do to manage the family in a way that is constructive? Now, we are talking to Ajay, who comes from one of the most iconic families that India had. At independence, almost everything that you heard of, other than the business also, forget about Sri Ram, but Lady Sri Ram College of Commerce, the whole vast areas that their family actually created. And then, for the last 35 years, he has been, in a sense, stewarding his side of the family as they have gone in and expanded. And now I'm sure he is thinking about the next generation and how they come into the business. So it's the ideal person actually to talk about, structures and how they think about these formal and informal structures. It doesn't have to be everything being written as a constitution, because unlike a nation, a family's constitution lasts only 10 years, 8 years, and then it has to evolve. And so it's a good time to get Ajay. And Ajay, give us a perspective of Kal Aaj or Kal for the Shri Ram family.
Thank you very much for inviting me on this program. It's really a pleasure to be here. Our group, the Shri Ram group, started 136 years ago by my great-grandfather, Sir Shri Ram. And as rightly mentioned, he was an institution builder. He was a nation builder. I think that was his objective at that time. We continued together as a joint family business till 1990. Then in 1988 or so, the family started feeling, let's restructure the group, because the number of male family members working in the companies was growing more and more. How do we give more independence, more space, and more actually ability of each one to pursue what they want to do? How do we move forward? So if I may say so myself, in 1990, we had a very amicable, cordial settlement between the entire Shri Ram family at that time. We split into 4 different companies. The allocation of businesses, because DCM Limited, erstwhile DCM Limited, had 7-8 different business activities and different SBUs, as we used to call it. So it was a negotiated discussion between family members of what will go into which group. Accordingly, in May 1990, 4 different companies were formed, and our company, my younger brother Vikram and I, got into the hot seat in 1990 of that time called DCM Shri Ram Consolidated Limited, which we later on changed to DCM Limited. I think that was a very big change for us, because prior to that, we were working in one of the SBUs in the erstwhile DCM Limited, reporting to an executive director. And suddenly we became managing directors. We were blessed in a way, and we were very happy that the board of directors we had were really wonderful. We actually took an approach that let's get an outside chairman who can give us the right values, the right culture, and whom we know. So we requested Mr. Mantosh Sondi, who was a director on erstwhile DCM Limited, to be our chairman. He was chairman for about 12 years. He set down a lot of systems, procedures, what should be the conduct on the board, how to bring about transparency, how to move in a structured manner, that what's best for the company. We always said so ourselves, that ultimately, end of the day, we are the largest shareholders. If the company does well, we are the biggest gainers. But we have a lot of responsibility.
But Ajay, I'm going to stop you for a second and ask you that the board of directors all companies have. Right. But what did you and Vikram do as the brothers to manage yourselves, as the family? And then how did you all start managing your kids? Because the board, of course, was there, and you all strengthened it, and you had a person as eminent as Mantosh Sondi on it, which was fantastic. But what did you all do that you all didn't allow any tensions to grow between you and your brother?
So I think there are 2 sides of it. One is management of the family. The other is management of the company.
Yeah.
I think one has to focus on both. Incidentally, about 95, 96, when we had at that time also different SBUs within the company, we are a firm believer that people are the core strength of any company. So we started working on teamwork building programs, and with a behavioral scientist. By then, my third brother, Ajit, also joined us. We actually started going out with the behavioral scientists to communicate. So I think 3 things which are very critical for family togetherness in a company. One is communication. There's no getting away. Communicate, communicate, communicate. That's the most important. Second is transparency. How to actually ensure that there is total data presentation of everything between the family. And the third, I would say, is intention. I told my brothers, I said, we are all human beings. I will say something you don't like. You will say something I don't like. But if the intention is not wrong, it's perfectly all right. Let's talk and sort it out. So we moved to the behavioral scientist, and we've had actually till date over 20 or 22 or 23 3-day, 4-day retreats just to talk, communicate, and just get things off our chest so we can talk to each other. So I think the family management on one side is very crucial. Secondly, on the company side, we actually told that time Mantoshi, we had a gentleman from Bombay who was the chairman of our audit committee. We told them, please be as strict and as rigid as possible. Please look at the details. Please ask questions. Please don't hesitate.
So Ajay, I want to stop you again and ask you a question.
Yeah.
When you asked Mantosh Sondhi, please be strict, please ask, it was also because you all were quite young at that stage when you suddenly became managing director, and there was some degree of anxiety in that role, you know. So you were not unhappy about having a mentor, elder statesman, you know, to start to guide you. At what point did it start becoming irritating to have a person like that?
No, I'll be honest with you, we never felt that, Janmay. We really never felt that, because in the audit committee meetings or any other board meetings, we actually suggested to our CFO, etc., please answer question. We encouraged our directors, you want to have a separate meeting with the CFO to understand the company better, please do that. And even now it's happened. So the communication level is high.
But one thing I will ask you, at the start when you became you were executive director, then you become managing director. How did you create your team? There would have been people who would have been unhappy. How did you change them or bring in a mix that could allow for your team to get created?
You know, the first thing we did after the restructuring, Janmay, was getting to know our people. So, you know, we used to go to Kota at least twice a month and spend at least one day just talking to the senior officers and understanding what their views are and what our views are. That's how we get to know each other. And as I mentioned, we do actually team building exercises with external resources. We went to Agra in 93 or 94 for 4 days with our senior most team to again just share and talk and get to know each other better. So I think outside resources play a very major role, provided you have an open mind. I think that's important.
I just want to delve into this point. The extent of self-awareness also required to say that let's bring in a behavioral scientist, let's bring in a structure where you have a statesman or a mentor to guide you through, and then come with an amicable family settlement at the end of it. And you know, Mr. Sriram, give us some color into what was going on at that time which led to this self-awareness.
Tamanna, can I interrupt you here? Can I say, you know, there is a difference in my view from an outside-in perspective. We'll get Ajay's view, of course. The patriarch or the Superman entrepreneur who creates the business, you know, they are a different breed altogether. The generations that follow have a very different sets of challenges. The first patriarch, the Superman entrepreneur, who does something when everyone was telling him he will fail, what are you doing, this risk, that risk. They have to really believe themselves. And they have to have this, I'm going to do this. And at that stage, you know, they are not the most open to, you know, being like an Ajay, bringing outside people in, etc. The Superman entrepreneurs originally, you know, they drive. Then the next generations have to know that they are not Superman entrepreneurs.
Exactly.
And that is what he knew, but the others don't always. You know, let's get his perspective.
So which is the point, that self-awareness that, you know, let's bring in expert help. And just because I'm in this family, in the hot seat, doesn't mean that I immediately take on.
You know, that's one point we've actually shared among ourselves as family, and more so to the next gen. Never feel that because you're a family member, you know it all. I think if that sort of a mindset comes in saying I have a right because I'm a member of the family or a large shareholder, I think that is where it can be very dicey for the company's future. So our approach is, let's get the best resources from wherever we can. Actually speaking, if you look at it this way, I think our job as managing directors is to get the best person for the right job at the right time. That is what we have to focus on. And right from day one of...
One question, that you do a retreat once a year or whatever. But on a day-to-day basis, how do you all communicate? How do you what is the structure that the family has to manage itself? Or not just the yearly things that you have, etc. But is there an advisory group? Is there a pre-board meeting discussion? How do you all align?
To be honest with you, Janmay, in the last 5-6 years, we have set up a family council.
Okay.
And it's a business family council, where we discuss business issues also on a periodic basis with a fixed agenda, with a structured system. I think what we have believed in from day one is, whether it's a family company or a non-family company, some processes and systems are absolutely essential. Unless there is some discipline on how we are going about managing the enterprise, we can't have whims and fancies. There must be a counter check.
So what is the membership of this family council?
This family council we have today has got 2 people from outside.
Okay.
And three of us from the family. And now my elder son, he's also become a deputy managing director a couple of years back. So he's also part of this. And we interact periodically to talk about how is the family going, how is the company going, do we need to bring out changes? And we've also got consultants from outside.
So decisions are majority or consensus?
Consensus. We in fact have told our EDs also and others, look, it may take, sometimes it may take a little longer, but we want to move by consensus. And if there's something which is grossly unfair, this is where outsiders come in. That they can bring in a different perspective, a new perspective compared to what we are. By being in the company for 30 years, you think in a particular way. But how do you get an outside-in perspective? That's very crucial.
I have a question here, because what is the key to success? When you spoke about the Superman entrepreneur, at the end of the day, there is this feeling that to run a successful business, you can't have a democracy kind of situation. And just borrowing from the word consensus, because that's how you'd want to run a country, but not necessarily a business. There's someone at the end of the day who has a right of veto, who takes a call, says yes or no, and then the burden of those decisions sits with them. Is that a sustainable way to move forward?
So let's ask him.
Yeah.
So in our case, frankly, because we've got 5 or 6 SBUs within DCM Shriram Limited, it's very clear which family member is responsible for which one. Ultimately, at the end of the day, the ED concerned has to report to someone. If there's an issue which comes out in a business, he can't look for 3 or 4 managing directors to, ask a question. So that's one. Similarly, corporate office functions also are reporting to someone. We have clarity on that. Then we have what we call a group management board, which meets every month. And there we review the performance of the business, and that has all the business heads on it. So that discipline comes in.
The kind of structures that Mr. Shriram is talking about, now we should sort of give a sense to our audience perhaps on how they can implement some of these ideas, because it's coming from a place of clarity, of thought, and ensuring and preempting any conflict. At what point do you start planning like this? When you see the first signs of trouble, or should this be something you put into place as your family and your business is expanding?
So let's ask him what he did, and then I'll give you what I've explored in different families.
Well, to my mind, frankly, the sooner one starts, the better. It's much better to do it and just start talking, sharing, communicating, each one voicing their own concerns, their happiness, their tensions, etc. So we know. Second, what we discuss very often is what is the intention of the family. I mean, family is making money or getting a financial return is one side, but it's much more than that. I think we are also proud of the legacy set up by Sir Shriram. We are trying to follow that of how we're building the right culture, how do we build the right social activities, how do we actually ensure that we are good corporate citizens who are contributing to the growth of the nation in whatever way we can. So all these issues come in, but sooner we start an open communication system, the better it is. And please don't wait till there's trouble.
Which,
it's better to do it before.
Which is my point, because a lot of people start, they have this idea of a utopian family and think it will all come
so
around.
shall I tell you what I have witnessed in the different families? There is a huge difference with the amount of years a family has been in business. When there is a patriarch, many of these structures don't exist. And the view from the top to the bottom is very different. The patriarch believes all they are his children, they'll all get along and you can do things. When the siblings come in, it's very important that they actually think about it. Otherwise, the first set of conflicts happen. Siblings, brothers fight. So to prevent brothers from fighting, because the switch from a patriarch to the first generation of siblings is very important that they are smart. If they are not, they will fight. So, you can see that a lot of family businesses have disruptive fights. It is not that Ajay and his brother don't disagree, but they don't have disruptive fights because they have put in some principles. Those who have disruptive fights have not put in those principles. So it's very, when the patriarch is there, many of these things are not there, and no one can challenge the patriarch really. They are also stewards in some sense, but they are 24/7 people, building the business, and the business is quite often their true love.
The point is that should the patriarch already put in these structures?
So the interesting question is, it depends on the personality of the patriarch. Some patriarchs are very thoughtful. They go into this in great detail. Others, want their children to make their own mistake and learn. And still others are too consumed in creating the business to have some much time to think about this. And there are three different buckets. Those who are just building and are running so hard that they don't have time to think, and they believe their children would have picked it up. I mean, they've been part of it. Then there are others who over-engineer it. Everything that they are so worried about.
They're micromanaging.
Yeah. And then there are those who say, these are some thoughts I have. Develop it, do it, do it the way you want. And they allow their children a lot of space, in that sense. So it's one of those things which is quite different. And I have seen this, any family which has been there for 60 years, 70 years, and all one rubbish we keep hearing, families can't go beyond 3 generations or from shirt sleeves to shirt sleeves. Compared to what? The other companies barely live 15 years, 20 years. So these businesses are living a lot longer.
So, just to recap as we wrap up this episode, because I think we should have a clear takeaway here for people who are watching, and many of them would be people running family businesses or expanding their family businesses. When we talk about some of the structures that should be put into place, and Mr. Sriram, I'll ask you to sort of give a sense of this, drawing from your own experience. Start earlier the better, and what are some of the tools that should be used?
I think, having a well-running corporate enterprise is the key issue. Ultimately, that is what is the backbone for stability, for growth, whether you call it wealth generation, whether you call it growth, whether you call it nation building. Unless the enterprise runs well, you can't really get the benefit out of it. So I think the competence of family members becomes very crucial. What is the training schedule for them? What is the program getting inducted into the business? How do we make sure that they are actually earning the respect of people they are working with?
Sir, may I just ask one side note? When you talk about competence, is there a mechanism to evaluate if the competence is actually there in an unbiased manner? Because sometimes that's a tough decision to make. At the end of the day, it's a family member, a loved one. But if one finds that the competence is simply not there, or the affinity is simply not there, what does one do?
So it is a challenge. I 100% agree with you. But I think the reality is if the competence is not there, one sees the business not moving in the direction it is supposed to move. You know, the youngsters who come, they have to go through a grind and move up the ladder rather than being able to sit on top from within 5 years as if they have a right. I think that's when things start going wrong.
Though, you know, if I was to just uncover what Ajay and his family have actually done, they've created the forums where family members who are really the primary owners in that business or are running the business have to have the chance to communicate actively, continuously, to be completely transparent with business results, to align on the intent of the family, and be part of the forums of the company where they are constantly being updated on how the company is doing. And some of them are the normal company boards, and some of them are created for the family to manage itself.
So if we had to make a sort of a very quick guide, and of course it will change from family to family, from business to business, of some of the structures that can be utilized, what would you say?
So I would say either you create a family council where and you have to answer in that, which are the family members that are going to be part of that council, what are the types of decisions that will come to that council, and how will those decisions be taken? And will they be done before you go on to the board or the company management board or whatever the company structure is? Because as Ajay had originally said, there is managing the family and there is managing the company. The managing the company, the SEBI has laid down the rules that you have to follow. But managing the family, you can't leave it to chance. You have to create some structure where family members can actually debate and think about the issues that the company is facing and get agreement so that their shareholding is expressed through one voice. So he said, you know, we have told different family members to take charge of different SBUs. Well, actually that family member is taking most of the decisions, but the others are, you know, part of a board where they are advising each other. But the right is with that person, you know, I mean, if you know what I mean.
Yeah.
So that's the way the family has to create a structure to manage itself, find alignment, first be informed, then find alignment, then communicate that alignment with one voice. And not allow these cliques to form, saying he's Ajay's man, he's Vikram's man, he's so-and-so. Then you are in trouble.
Yeah. Let's get the last word on this from Mr. Sriram, and, you know, the advice to people watching this who are hoping to have a family business that spans decades.
I think, you know, the passion which family members bring in when they start a business is very powerful. I think that's a great strength which can continue. But you have to actually move to first set the enterprise correctly, which means getting good people, taking advice from people outside, how to grow the enterprise. As you're moving forward, I think the communication and understanding between family members are crucial for harmony. So that's where, as I mentioned earlier, communication, intention, transparency, all these play a very crucial role in ensuring that the family moves together with the right objective. We've also written a family constitution, and people should, because that's what brings in alignment in the thinking among family members of what is their purpose, what is the reason for being in the business, and what do they want to see 20 years and 40 years down the line. So I think some of these alignment activities are crucial to really go forward and have a successful enterprise. Of course, managing the business itself is crucial in today's world, especially. Business processes, business systems are absolutely essential to ensure that there is a proper management of the enterprise. So you move at a pace by which the businesses can manage and grow at the right pace. But I think family alignment and growth of the business go together. How to keep that going together is very crucial for future success.
Absolutely. Thank you so much, Mr. Sriram, for joining us and sharing your wisdom and your experience. Mr. Janmejay Sinha, thank you so much.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world. One solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, Friday cheer just about returned to the market. Nifty managed to shut shop in the green. Sensex also clawed back after giving up more than 150 points around noon. Most sectors ended the day in the green. Auto and telecom stocks inked gains. Select defense countries were also in good shape after the Modi government has unveiled India's biggest defense upgrade plan since independence. The Indian rupee slipped to a fresh low of around 88.36 against the US dollar on September 5 amid likely foreign selling and pressure from the US tariff actions. The currency is currently trading near its lowest level in recent months, weighed down by concerns over trade tensions and also capital outflows. Now, in the past week, the rupee has fluctuated between approximately 87.88 and also 88.32 against the US dollar. Now, analysts suggest that rupee may remain under pressure in the near term as markets await further clarity on the geopolitical and economic factors impacting the foreign exchange flows. Indian IT stocks saw a sharp decline and then a partial recovery during early trade today following an unconfirmed report that US President Donald Trump might impose tariffs on the IT sector. So the Nifty IT index dropped as much as 2.3%. Key Indian IT exporters such as Tata Consultancy Services, that is the TCS, Infosys, Wipro and HCL Tech, experienced share price declines due to concerns over the potential impact. So the US is a major market for these firms. However, Bloomberg later denied the report linking to Trump to any imminent tariffs on Indian IT companies, helping stabilize the market somewhat. Now, the earlier US tariffs imposed on Indian goods in August, including those targeting Russian oil imports, had already created trade tensions. Bluestone Jewelry and Lifestyle reported strong Q1 performance with key metrics showing robust growth. So So the company listed on BSE and NSE on August 19 continues to strengthen its market position. Repeat revenue ratio hit of 50.7%, reflecting solid customer loyalty. Now, customer numbers surged by 34% and average order value also rose by 23%, signaling strong demand. Zydus Life Sciences subsidiary has inked an exclusive licensing and supply deal with Symphony BV of the Netherlands for ozanimod capsules, a generic version of Zeposia targeting the US market. Now, Symphony, one of the first filers, secured tentative FDA approval within 30 months, qualifying for a shared 180-day exclusivity period upon launch. So, Zydus will handle commercialization while Symphony manages regulatory approvals and also the manufacturing. So the US market for ozanimod, used for multiple sclerosis and also ulcerative colitis, is worth $637 million, which is nearly 5,600 crore rupees. Yasho Industries has signed a 15-year supply agreement with a leading global multinational for lubricant additives set to generate 150 crore rupees in annual revenue from Q4 of FY27, equating to 23% of its FY25 top line of 673 crore rupees. So the Mumbai-based specialty chemicals firm will receive an advanced construct, a dedicated facility at its Pakhajan, Gujarat plant, with completion expected in 12 to 18 months. So pricing will follow a pre-agreed formula ensuring stable margins. Shares have jumped 4.7% to nearly 1,861 rupees, with volumes up 30% to 4,870 shares. Ola Electric shares dropped nearly 6% following Japan's SoftBank Group selling a 2.15% stake in the company between July 15 and also September 2nd. SoftBank's investment arm SVF2 Ostrich LLC offloaded about 94.9 million shares, reducing its holding from 17.8% to 15.6%. Despite the stake sale, Ola Electric has seen a strong rally in the recent weeks, driven by government incentives and also approval under the production-linked incentive scheme for its Gen 3 scooter range. So the company recently revised its battery cell manufacturing plans, targeting 5 gigawatt per hour capacity instead of earlier 20 gigawatt hour capacity goal by 2030. So shares have fallen around to 60 rupee, trading below the IPO price of 76 rupees. Vodafone Idea rallied 10% and also hit the upper circuit on heavy trading volumes, extending gains for the third day. The stock reached 7.27 rupees, driven by renewed investor interest, and also reports the government is seeking a strategic investor to infuse over $1 billion for a 12 to 13% stake. Now, this move aims to support the debt-ridden telecom giant struggling with nearly 83,400 crore rupees in AGR dues and also high annual payments. So the government and promoters may dilute stakes to stabilize the company. Vodafone Idea continues exploring non-bank funding sources to sustain capital expenditure and also network expansion. Shares of Brainbee Solutions, First Christ parent company, surged up to 14% to 403 rupees in trading after the government's GST Council cut taxes on key products. So the GST rate on personal baby care and beauty products was reduced from 18% to 5%. Baby napkins and clinical diapers from 12% to 5%, and toys from 12% to 5%. Stationery items like pencils and geometry boxes will face no GST. Now, this tax relief is expected to lower the prices and also boost consumption, aiding First Christ revenue. The company reported a 12% revenue rise in Q1, but also a margin contraction. PNC Infratech has emerged as the lowest bidder for a 495.5 crore contract from Bihar State Road Development Corporation to construct a high-level bridge and also approach road on Hathuri Atrar Bavangama Orai Road in Bihar, spanning 21.3 kilometers to be completed in 1,095 days. So the company also secured a 297 crore rupees of project from Airports Authority of India for developing Lal Bahadur Shastri International Airport in Varanasi, involving runway extension and also strengthening with an 18-month timeline, with an order book exceeding 17,000 crore rupees. As of Q1, PNC Infratech strengthens its infrastructure portfolio. Biocon shares rose 2% following the US Food and Drug Administration's recent inspection at Biocon Biologics drug substance facility in Bengaluru. So the FDA issued a Form 483 with 5 observations, all procedural in nature. Importantly, these observations do not relate to data integrity, systemic non-compliance or quality oversight. So the inspection covered manufacturing units, quality control labs, microbiology labs and also warehouses. Biocon Biologics will submit a corrective and preventive action plan within the stipulated time frame and is confident in addressing the observations promptly. Sunteck Realty shares soared 12% intraday today, hitting 496.8 rupees on the NSE, driven by news of a 500 crore rupees of fundraise via preferential issue to fuel its expansion. Now, despite a 13% year-to-date drop and 24% decline over the past year, the stock reflects strong investor optimism. So Q1 of FY26 saw pre-sales rise 31% to 657 crore rupees and also collections up 3% to 351 crore rupees with a net debt to equity ratio of 0.02 times and also 108 crore rupees of cash flow surplus. So a new Andheri redevelopment project adds 1100 crore rupees to its 40,000 crore GDV, with management targeting 50,000 crore rupees by FY26, expecting over 30% pre-sales growth and also improved collections. RPP Infra Projects has secured a 134 crore contract from the Maharashtra State Infrastructure Development Corporation for the improvement of the Mathiran-Neral Kalamb Road in Karjat, Raigad district. So the letter of acceptance was received on yesterday. The project to be completed within 12 months enhances the regional connectivity. RPP Infra's order book under execution stands at 2,762.89 crore rupees as of March 31. TD Power Systems reported strong Q1 of FY26 consolidated results with significant growth compared to the same period last year. Revenue rose 35.8% to 372 crore rupees from 274 crore rupees and also EBITDA increased 42.2% to 68.8 crore rupees with margins expanding to 18.5% from 17.7%. So net profit has jumped 41.7% to 50 crore rupees versus 35.3 crore rupees a year ago. So the order book stood at 1,468 crore rupees as of June 2025 with a book-to-bill ratio of 1.14 times. So order inflows grew 32% in the quarter to 392 crore rupees. The company also expects to revise its FY26 revenue guidance upwards, maintain margins and also fulfillment of increased orders will be supported by a third manufacturing plant starting in FY26. Domestic business sees marginal growth potential boosted by hydro refurbishment tenders. Moschip Technologies shares surged 48% over 6 sessions, hitting a 52-week high of 279 rupees. So this is fueled by India's semiconductor ambitions showcase at Semicon India 2025. Prime Minister Narendra Modi's engagement with global chip CEOs and also the GST Council's rate cut from 28 to 18% on electronics has boosted the sentiment. So trading volumes have spiked with 36.64 lakh shares worth 87.04 crore rupees exchange. Moschip, which is a key player in silicon and product engineering, benefits from the India Semiconductor Mission 2.0. India Resurgence Fund has made an open offer to acquire up to 3.85 crore equity shares representing 26% of the expanded share capital of Sri Digvijay Cement Company. Now this follows an agreement with the current promoter True North Fund to sell up to 50.1% stake to IRF entities. Upon the completion of the transaction, IRF will gain control of Sri Digvijay Cement with True North stepping down as promoter and also being reclassified as a public shareholder. So the open offer price is set at 92.2 rupees per share, 92.2 rupees per share, slightly discounted to the last closing price. Bharti Airtel, promoter of Indus Towers, acquired 68.76 lakh shares between August 25 and also September 1, further solidifying its majority stake in India's largest telecom tower company. Now, this follows a share buyback that raised Airtel's holding to 50%, making Indus Towers a subsidiary. So today, Indus Towers shares rose 2.93% to 333.6, with the intraday high of 333.85 rupees and also low of 324.5 rupees. Trading volume surged 859.64% to 3,968. My bad. This is 39,68,898 shares against a 5-day average of 4,13,582. So the stock 24.69%, which is below its 52-week high of 442.95 rupees, and also 6.72% above its low of 312.6, and this also reflects a market cap of 88,009 crore rupees. So the purchase aligns with Airtel's strategy to strengthen its telecom infrastructure grip, also which is amid robust 5G rollout demands. Prostam Info Systems has been awarded letter of award by Karnataka Power Transmission Corporation to establish a 150 megawatt is to 300 megawatt standalone battery energy storage system at the 400 kV Doni substation in Gadag district, Karnataka. So the project secured via tariff-based competitive bidding on a build-own-operative basis for 12 years offers a rental of 2.54 lakh per megawatt per month. So this is translating to 45.72 crore rupees annually. It also includes viability gap funding of 27 lakh per megawatt hour or 30% of the capital cost, whichever is lower. Indus Towers saw a block trade of approximately 1.2 million shares, with stock rising 2.34% to trade at 331.7 rupees. So the share price has fluctuated between an intraday high of 332.5 and a low of 324.5. with overall trading volume significantly higher than the 5-day average by 848.6%. So the stock is currently trading at 25.12%, which is below its 52-week high of 442.95, and also 6.1%, which is above its 52-week low of 312. So the market capitalization stands around 87,508 crore rupees. Recently, the company's approved expansion into African markets, including Nigeria, Uganda, and Zambia, which is aiming for revenue diversification despite some investor concerns. Tata Group owned Indian Hotels Company, operator of Taj Vivanta and Ginger brands, reported a malware incident affecting select IT systems on September 4. So the company swiftly acted to contain the issue, notified that relevant authorities, and also have continued to monitor it closely with no impact on the business operations. So shares have risen 0.12% to 775 rupees, with low trading volume of 9,929 shares, which is compared to a 5-day average of 66,568. So the stock is down 13.28% from its 52-week high and above its low of 646.5. US President Donald Trump announced plans to impose a fairly substantial tariff on semiconductor imports from companies that do not move production to the United States. He emphasized that the companies investing in US manufacturing, such as Apple, would be exempt from these tariffs. So Trump's move aims to incentivize the domestic chip production, and amid a competitive race with China over advanced semiconductor technologies critical for AI development. So the exact tariff rate and timetable are yet to be disclosed, but his administration is pushing ahead with this trade measure to bolster US manufacturing and also reduce the reliance on imports. Gold prices are on track for their best week in 3 months as investors await the US jobs report scheduled today. Now, the market is focused on this data for clues on the Federal Reserve's next move on interest rates. Expectations of slower job growth and also a steady unemployment rate may increase the bets on a rate cut, which is supporting gold as a safe haven. So in addition, a softer US dollar is also boosting gold prices. The August jobs report is expected to show around 80,000 jobs added and unemployment steady at 4.2%. The Modi government has unveiled a 15-year multi-billion-dollar defense modernization plan, which is the largest since independence. The roadmap includes nuclear-powered warships, next-generation battle tanks, and also advanced AI-powered weapons. The army will induct 1,800 future tanks, 400 light mountain tanks, 50,000 tanks, mounted anti-tank missiles, and also 700 robotic counter IED systems. So the Navy plans to new aircraft carrier, 10 next-gen frigates, 7 corvettes and 4 landing dock platforms with nuclear propulsion approved. So the Air Force will acquire 75 pseudo-satellites, 150 stealth bomber drones, precise munitions, and also over 100 remotely piloted aircraft. So the plan emphasizes AI, autonomy, and also space warfare for future readiness. The city is on high alert after a chilling WhatsApp message claimed 34 vehicles carrying human bombs and 400 kilograms of RDX are set to trigger blasts that could kill 1 crore people. So the threat received on the traffic police helpline from a group calling itself Lashkar-e-Jihadi comes ahead of the Ganesh festival's culmination. Mumbai police have tightened security across Maharashtra, though recent similar threats proved to be hoaxes. A viral video captured Maharashtra Deputy Chief Minister Ajit Pawar threatening IPS officer Bhagyashree Navtake in Pune today at 11 a.m., sparking a political uproar. During a road-widening project dispute, Pawar warned, "I will see how you stop the work," leading opposition parties to cry foul over power misuse. The BJP defends it as Pawar's normal tone, dismissing Rao as routine. So the incident amid public scrutiny has opposition planning protest, while the government calls it a heated exchange. Social media erupts with debates, intensifying the pre-election tensions in the state as investigations loom. In a stunning development, Daniel Levy has stepped down as Tottenham Hotspur's executive chairman after nearly 25 years at the helm. Levy transformed Spurs into global powerhouse, overseeing the construction of the state-of-the-art Tottenham Hotspur Stadium and also securing a Europa League title last season. However, fan criticism over transfer policies and also 17th place Premier League finish last year marked his tenure. Lionel Messi was in tears last night as he played his final competitive match in Argentina, leading the team to a 3-0 World Cup qualifying win over Venezuela. Now, the 38-year-old scored twice, earning a standing ovation from 80,000 fans as the Estadio Monumental. Messi called it a dream to finish in front of his home crowd, but remained cryptic about the 2026 World Cup. So with Argentina already qualified, the football world awaits whether the legend will chase another title. London City Lionesses have shattered the women's world transfer record, signing French star Grace Gayoro from Paris Saint-Germain for a staggering £1.43 million. The 28-year-old midfielder with 100 caps for France joins the newly promoted WSL side as their 16th summer signing, reuniting with coach Jocelyn. Backed by owner Michelle Kang, this blockbuster move signals the Lionesses' ambition to compete with the WSL's elite Gayoro's debut and is also expected soon, though she may miss their opener against Arsenal. Well, with that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit and don't go anywhere.
Sridhar Shivram, Investment Director at Enam Holdings, joins us right now on the show. And Sridhar, good morning and thank you so much for joining in.
Thanks for inviting me.
No, the pleasure is always ours. You bring out points which a lot of mere mortals like me fail to look at first glance, and I'll come to those detailed points too. But just the broad 50,000 feet view, are you happy and enthused by the moves that have been taken? A lot of it was on predicted lines, but there was some better than expected delivery from the government as well.
So if you ask me, I'm happy with the moves that the government has taken now. We've been saying earlier that a direct tax cut benefits only 2 to 3% of the population, whereas any change in the indirect tax benefits 140 crore people and has a far-reaching impact. So I'm happy to see what has happened on the GST side, because this will have a much greater impact, but over time. So I think the problem is market often expects everything to happen the next day. That may not happen. We have a lot of other issues, on the geopolitical side or on the macro side. But if you ask me from the government side and RBI, they've done so much. There's only that much they can do. The rest is up to the corporates and the earnings and all the other factors to play out. But that's how markets are. They're never linear, right? You have phases. So I have no complaints. I think they've done everything, and markets will play out over a period of time.
Oh, certainly. Is this meant to be, Sridhar? I mean, yesterday I was talking to Madhu and Ramdev, and they were saying that the view was that, or one of my interpretation of the view was that it's almost a measure that is even bigger than the budget announcements that are made at times, this simplification. And it has, as you said, a longer term implication, and people should look at it that fashion, that it is a move of such a magnitude that the benefits will play out over a 12, 18, 24 month period, and think of them that way, and they will be very large in nature. Would you second that?
Yeah, so I think when I look at the details, it sort of gives me a feel that the benefits are more to middle and lower middle class, and that's how it should be.
Right.
There are some, taxation which has gone up, some sin tax, and I have no complaints on that. It will neither have an impact to a large extent on the consumption either way, but the simplification and the reduction of taxes at the daily use items, those will have a longer lasting impact, and I think over a time it will play out. And the other thing is simplification, that you don't have so many tax slabs now, so it is a much easier and much simpler way. And I think I'll have to give full credit to the government for every reform measure that they have taken over the last, say, 3-4 years. And finally this, I mean, this is something that we've been saying, that indirect tax benefits more than a direct tax benefit. I'm not saying direct tax is not welcome. It is welcome, but
this is better.
I would prefer an indirect tax, and that's how it's played out.
Now, you've been a dove on inflation, and yes, I presume that you believe that this plus a set of recent moves are further deflationary or anti-inflationary.
Yeah, exactly. So I think not a lot is documented that a cut in GST also helps the CPI inflation. A rough calculation suggests that it should have an impact of about 50 basis points on a durable basis, because this is a cut in tax and the prices go down.
Right.
Now, will the entire 50 basis points stay? We are assuming at least 25 stays, because some price increases over a period do happen. But even a 25 basis points on a durable basis reduction is significant. So we were already on the dovish side as far as inflation is concerned. So our number for Q3 is around 2%, RBI is at 3.1. So we are almost now 100 basis points away from where RBI is. And I'm reasonably sure, which happened in Q2 also, that RBI came down closer to the number that at least we were suggesting. The same will happen for Q3 also. But the question is there more room for rate cuts? We think another 25 basis points, sure. And if Fed is supportive, that if Fed cuts some more, then we have more rooms. I think the joker in the pack here is how rupee is behaving. And so if RBI has to manage multiple legs, they'll have a close eye on how rupee is. And that may also determine whether they want to cut or not. But in our view, when we look at all of it put together, we think another 25 basis points, they'll have room.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Nifty and Sensex close flat after market seesaw. Most sectors end higher with Nifty Auto as the top gainer and IT loses the most. Mid and small cap indices outperform the benchmarks. President Trump reacts to India, China, Russia bonhomie at the SCO summit, says the US lost India and Russia to deepest, darkest China in a cryptic Truth Social post. Meanwhile, the MEA hits out at Peter Navarro's statements on India. Spokesperson Randhir Jaiswal calls them inaccurate and misleading, says both India and the US share a comprehensive global strategic partnership. Experts weigh in on the GST overhaul. Bajaj Finserv Sanjeev Bajaj calls it the most prominent GST reform since its formation, while Enam Holdings Sridhar Shivaraman believes it will boost consumption. The government unveils India's 15-year defense roadmap with a plan to induct nuclear-powered naval warships, long-range hypersonic missiles, 150 stealth bomber jets and more. Bank of Baroda classifies Anil Ambani and Reliance Communications loan account as fraud. Company says these loans are from before it was admitted into insolvency and will be resolved either through a resolution plan or liquidation. The Mumbai police issue a lookout circular against Shilpa Shetty Kundra and her husband Raj Kundra in a 60 crore rupee fraud case. The couple is accused of defrauding a businessman in a case linked to an investment deal for their now defunct Best Deal TV. Good evening. You're watching Profit 360 on NDTV Profit, and I'm Sanjana. Let's go right into some breaking news coming in right now. Vedanta is likely to be selected as the top bidder for Geopolitical Associates. Let me go across to my colleague Vishwanath Nair for more on the story. Vishwanath, give us all the details.
Right, Sanjana. So what we know at this point in time is that Vedanta Group has likely been selected as the top bidder for Geopolitical Associates. It's an asset where there's been a fairly long resolution period. Back in 2017 is when the account was classified as an NPA and was likely to see insolvency action. But since then, there are multiple delays. And now it seems that among the 5 bidders who were part of this entire transaction, Geopolitical Associates has been selected as the highest bidder. And their bid is actually worth 17,000 odd crore. However, the net present value, which accounts for time value for money, is actually 12,500 odd crore. So essentially that is the amount of money over a period of time that the lenders are expected to get, considering the time value for money. So that's a fairly decent deal, because of course the actual outstanding debt for Geopolitical Associates is significantly higher than that, close to 45,000 crore. But in comparison to that, a 12,500 crore resolution plan in the current scheme of things seems like a decent deal. But we'll have to see how the rest of the bidders react, because remember that especially in transactions like this, even after the highest bidder is selected, the other bidders can still come into the picture and try to sway the deal in their favor, and we need to see whether any of that is going to happen in the Geopolitical Associates case. Specifically, as part of this transaction, there's multiple cement assets, there's power assets, there's hospitality assets, roads, as well as the race circuit in Delhi. All of these are up for grabs for any bidder who takes over Geopolitical Associates. That's the situation right now. Vedanta Group likely being selected as the highest bidder.
Vishwanath Nair, thank you so much for bringing us those updates. We'll continue tracking the story and bring you all of the developments. Let's move on now and have a look at how the markets fared today. We saw a little bit of Friday cheer on the street. Nifty managing to shut shop in the green, and the Sensex also clawed back after giving up more than 150 points around midday. All sectoral indices barring IT gained this week, with metal leading the way. Auto also fueling a fair amount of gains, ending over 5% in the week. My colleague Harsh Saita joining in with a wrap of all of the market action for the day and for the week.
Well, the Nifty is closed absolutely flat for the day. We've closed 24,700 plus, so we've held that level at least at close, even though we slipped briefly below that as well. So we saw a bit of a recovery from that low of the day. But surely the strength of the morning was given away for a better part of the day, and thereafter we saw a bit of a recovery. Now let's talk also about the breadth on the Nifty, and that was largely tilted in favor of the gainers, and we had around 27 gainers to 23 losers on the Nifty. The gainers largely dominated by the auto sector. 3 out of the top 4 gainers were from the Nifty auto pack, and the 4th one was Shriram Finance, which is also largely a play on auto, and therefore all of those largely, I would say, linked to auto. What didn't do well were some of the IT names, and those dominated the bottom of the screen, along with maybe an ITC, which was the top loser on the Nifty 50. So broadly, that's how it played out. The one big boy, Reliance, did fairly well for itself, 1.2% higher in trade, and that, despite that, in fact, if I can call it, the Nifty closed just about flat. So that was the texture. Let me now talk about sectors as well. The metals outside of auto was the other sector which did relatively well. In terms of the losers, you had quite a few. You had Realty. The Nifty Realty was one of the losers, and you saw some bit of pressure in broader markets where some of those names were concerned. The Nifty Bank and the Nifty PSU Bank. The Nifty PSU Bank closed around 0.25% higher, so some bit of outperformance there. But the Nifty Bank absolutely flat again. The Nifty IT was obviously one of the top losers in trade today. So that's broadly how sectors also played out. Auto, of course, was the top sectoral gainer. Now let me talk a little bit about the week as well. And for the week, the Nifty 50 index didn't do much. The Nifty mid-cap and small-cap indices did much better. So we saw both of those indices relatively outperform the Nifty by quite a bit. In fact, the Nifty small-cap index has gained 2% for the week. So it's had a fairly good week. if I can call it that. So the broader markets obviously dominating versus the Nifty 50 for the week gone by.
Right, Harsh, thanks so much for that. And meanwhile, Sanjeev Bajaj, Chairman and Managing Director of Bajaj Finserv, has welcomed the recent GST reforms, calling them one of the most prominent changes to the framework since its inception. He also weighed in on whether the lack of input tax credit for insurers under the new GST reforms is a concern. Meanwhile, Sridhar Sivaram, Investment Director at Inam Holdings, believes a reduction in GST rates could have a more meaningful impact over the longer term. He also laid out the impact he is penciling in and the timeline for this uptick.
Very broadly, I'm clear that prices should go down. There will be a benefit. How much benefit? Everybody's calculating that. We also have to use this opportunity as an industry to tighten our belts, to get more competitive, to improve our efficiencies, especially volumes go up. Look at on health insurance, there's been a big saving in GST for hospitals. Hospitals need to play an equally important role in cutting their rates. So we have to look at this end to end to see that how do we really end up making money even as industry, not on each individual loan or insurance policy or patient that we service, but on the larger volume. We have so far scratched only the surface of India. If we go deeper into India in the coming years and do this together, it is to the benefit of the consumer and it will be to our benefit as well.
We've been saying earlier that a direct tax cut benefits only 2 to 3% of the population, whereas any change in the indirect tax benefits 140 crore people and has a far-reaching impact. So I'm happy to see what has happened on the GST side, because this will have a much greater impact, but over time. So I think the problem is market often expects everything to happen the next day. That may not happen. We have a lot of other issues, on the geopolitical side or on the macro side. But if you ask me from the government side and RBI, they've done so much. There's only that much they can do. The rest is up to the corporates and the earnings and all the other factors to play out.
And it may not be a Diwali dhamaka for food delivery workers this year, with Swiggy and Zomato now bracing for a hefty 200 crore rupee GST outgo on delivery fees. With the GST Council's move now making platforms liable to collect and remit 18% tax, insiders say food aggregators are actively weighing options to offset the hit. My colleague Agni joins with more details.
So Swiggy and Zomato's rupees 200 crore annual GST outgo is likely to impact delivery partners directly. How so? Well, delivery partners currently come under an argument that Swiggy and Zomato present that they are not employed by the company, they are gig workers with the firm, and hence the company is not liable to pay GST on delivery charges that goes to the gig workers. But the new GST amendment makes the GST rationalizations makes food delivery partners liable for the 18% GST for collecting and remitting it for local delivery partners. So remember that analysts expect around 200 crore of annual outgo as GST for this 18% bracket from food delivery platforms, and this is likely to come out in the form of less payout to delivery executives on Swiggy and Zomato. This is what sources have been telling us, because remember both these companies have rolled out price hikes on their platform fees, and though customers are sticky in nature, they won't move away from the platforms. What they will end up doing eventually, if prices are jacked up too much too soon, is that they'll reduce their order volume. So a volume impact on the customer's end is what these platforms fear, and they can't charge this to the restaurants themselves, because restaurants are up in arms over high commissions and different types of fees that they are being charged. So the only leeway these platforms are seeing right now, according to sources, is through the delivery partners' payments, where they will adjust most of the 18% fees that has to be collected and remitted. So for some context, Zomato says it has over 3.5 lakh delivery partners, whereas Swiggy says it has over 5.2 lakh delivery partners. So clearly the quantum is lakhs and lakhs of delivery workers who are likely to get affected in a negative way from this GST impact.
Thanks, Agni, for this. Meanwhile, let's go on to some crucial updates coming in on the US and India front. US President Donald Trump weighed in on the recent Russia-China-India meeting at the SCO summit. Donald Trump has stated that the US has lost India and Russia to deepest, darkest China. He also added that may these countries have a long and prosperous future together. Now, this comment comes after a symbolic photo from the SCO summit in Tianjin, where the Prime Minister, Vladimir Putin, and President Xi Jinping were seen together. Trump's remarks underscore the perception of estrangement from both New Delhi and Moscow as Beijing pushes its vision of a new global order through the SCO platform. Now, the gathering at the summit came amid escalating trade tensions between US and India, and the image of three leaders holding hands and sharing a light moment symbolized a united front countering US and Western dominance. And let's also look at what else is happening on the front of the US, because we also heard from US Commerce Secretary Howard Lutnick, who sent a strong message to India and said that the US is always willing to engage in a dialogue, but criticized India's increasing purchases of Russian oil, calling it the wrong move. Now, he's also urged India to support the dollar, and if it chose not to, he hinted at possible trade consequences, including a 50% tariff. The US Commerce Secretary also expected India to join discussions at the negotiating table within the next month or two. And India, meanwhile, has rejected remarks by US trade advisor Peter Navarro, calling them inaccurate and misleading. MEA spokesperson Randhir Jaiswal stressed on the importance of the Indo-US strategic partnership rooted in shared democratic values and close people-to-people ties.
We have seen the inaccurate and misleading statements made by Mr. Navarro, and obviously we reject them. As far as India-United States relations are concerned, प्रणय, ये हम लोगों ने पहले भी कहा है कि दोनों देशों के बीच में एक कॉम्प्रिहेंसिव ग्लोबल स्ट्रेटेजिक पार्टनरशिप है, और हम चाहते हैं कि इस पार्टनरशिप को जो मुद्दे तैयार किए गए हमारे बीच में, एक सब्सटेंटिव एजेंडा जिसको बनाया गया है, उस पर काम करके हम इसको आगे ले जाएं, दोनों देशों के बीच में एक आपसी समझ के साथ, दोनों के शेयर्ड इंटरेस्ट के साथ, और साथ ही साथ म्यूचुअल रिस्पेक्ट के साथ। आपका मैं ध्यान लाना चाहूँगा, युद्धाभ्यास चल रहा है अलास्का में, साथ ही साथ कुछ दिन पहले 2+2 का इंटरसेशनल मीटिंग हुआ था, एक और डेलीगेशन, एक दल आया था डिफेंस पॉलिसी ग्रुप का अभी कुछ दिन पहले। तो दोनों देशों के बीच में आवाजाही, दोनों देशों के बीच में बातचीत चल रही है, और हम प्रतिबद्ध हैं कि इस साझेदारी को और मजबूत करें।
And let me quickly now go across to Peter Cardillo, Chief Market Economist at Spartan Capital Securities, joining us. Welcome back to NDTV Profit, and good evening. I'm going to cut right to the chase. A lot that's happened in the United States in the last few hours. How are you assessing the likely market and currency implications of Commerce Secretary Lutnick's demand that India support the US dollar or face the possible tariff of up to 50%, especially if India continues diversifying away from dollar-based settlements through bulk purchases of Russian oil?
Well, I think, the fact that we saw strong unity at the SOC meeting in Shanghai, obviously that sent a message to the White House. And I think the White House now is beginning to perhaps reconsider that more dialogue is necessary, and that they're going to have to try to win over India again. I mean, President Trump did make some statements saying, that India and China were lost, and he was basically alluding to the Russian trio partnership that we saw emerge at the SOC meeting. And so I think that what we saw at the SOC and some of the comments coming out of the White House suggest that sooner or later there will probably be a reversal in this so-called chill trend, and that should get India back on track and perhaps make a deal with the United States.
All right. Given the escalation in US-India trade frictions amid tariffs from India's ongoing Russian oil imports, what disruptions do you foresee for global oil prices, cross-border capital flows and international investor sentiment towards Indian assets? And which indicators would you monitor most closely to gauge the real-time impact?
Well, obviously, you always have to gauge two important macro indicators, and that is consumers' confidence within a nation, and of course, consumer spending. So let's talk about consumer spending. If India continues to buy cheaper oil from Russia, obviously that boosts consumers' sentiment, and that means that the consumer is likely to spend more on energy products and vice versa. So I think a happy medium would need to be reached. And I think that, as I said before, the events of the SOC, the hard line taken by India and the White House will eventually lead to a softening of an agreement that will be beneficial to the Indian nation and to the United States. Remember that, yes, India can make trade deals with other countries, but India needs certain American products, certain American technology, and that would apply to the United States as well. So again, I remain hopeful that somewhere down the line, things will reverse.
So, and I think that that's the hope that even the United States has at this moment, because let's remember, Peter, as trade negotiations loom in the next month or two, let's look at once again what major concessions or trade-offs might emerge between Washington and New Delhi, and what practical strategies should the investors adopt to navigate expected volatility, last-minute headline risks in equity, currency, commodity markets?
Yeah, I think, the biggest point is oil. And of course, that's what actually aggravated the White House. So I think, there'd have to be some sort of a mutual agreement. That's not to say that India can't buy Russian oil, but at a reduced rate. And that means that they would have to buy some more expensive oil from the United States. But I think that's the key factor here.
All right, Peter Cardillo, Spartan Commodities, thank you so much for joining us this evening. We'll continue tracking what's happening in the United States and continue to track all of these key developments. But let's also take a look at how Wall Street opened. We saw S&P rising to a record high, while the Nasdaq has registered a 0.6% uptick. We're also looking at the Dow gaining 0.2%. All of this surge despite a weaker than expected August jobs report. And according to the report, we saw the US adding 22,000 jobs in August, which is below the 75,000 that economists were expecting. And along with that, the unemployment rate has also risen to 4.3%, which was in line with expectations. This is pushing traders to bet that the data will lend support to the Fed's case to go ahead with the expected rate cut at its September policy meeting, as suggested earlier at the Jackson Hole Symposium as well. Meanwhile, Indian MSME exporters are exploring ways to circumvent US